notes that's being made during the session itself. I'll be giving the session notes as well after the session itself. Cool. So with that out of the picture, let's start talking about trading itself, right? So just a couple of expectations for especially the beginners out here about trading itself is that trading is not a get rich quick scheme. It's not something where you make money right off the bat. I'm not saying that you guys won't make profits in the first week of trading. You probably will make profits, but you will make losses as well. You have to understand that losses are always a part of your trading journey. It's all about learning from your losses and getting better at it. Think of trading just like every other learning, just like every other skill out there. Consider that trading also as a graph for learning, right? You make, it's like a stepping stone towards your success, something similar. So make sure you have something called as your trading journal. This is nothing but a book in which you will write down all the trades you took on that particular day or week, and you will just review through these trades every now and then. That's how you improve as a trader. So the first step towards your financial discipline or your trading journey is basically a trader's journal. So make sure that you have that also with you when you start out with this journey. So a couple of expectations I want to set with you regarding trading itself is that uh, like it has this initial learning curve of trading that you have to pass through. Like this is a skill that has no high ceiling limit or anything like that. That is, you have the, if you have a phone or your laptop wherever you are in the world, even if you're traveling, even if you're doing whatever, you have always have that skill which directly makes money for you. It could, you can take this as a passive source of income or an active source of income. Again, you don't have to trade only in the Indian markets. It's not just from 9 a.m. to 3:30 p.m. You can trade across the globe. You can trade 24 hours also if you want to, and you can choose to be a full-time trader, part-time trader, depending on your career success and all these things. So I'll walk you through when to switch. Like everyone has this question about, can I quit my job and start trading? When can I do that? All these things we'll talk about in today's session itself. So my expectation from you guys is very simple. Put in that initial time and effort to get past the learning curve. It's usually around 2 to 3 months of good effort. Then it's a lifetime of earnings ahead of you. That is, you're learning a skill that you can directly rely on at any point of time in your thing. So just spend that initial time, get past that learning curve, then keep practicing over time. You can start with as a part-time or hobby first. Then if you will keep liking it, you can actually switch out to this as a full-time thing as well. So I'll show you and I'll walk you through how each of these journeys actually go through. And let's start with that. So having said that, I'm personally biased, but trading I feel is one of the best skills out there. So just put in that time and effort to get past that learning curve, and you will see yourself getting rewarded for it. Awesome. So let's start on that note with today's session. So let me quickly introduce myself as well, and then we can go forward. One is, my name is Akash. I'm the CEO and co-founder of vebhinar. I've been in the markets for 9 years right now. I started trading from my first year of college. Like I started with a capital of around 3,000 rupees. By then, like there was a lot of YouTube channel which said 100% working strategy, get rich, like all these Lamborghini lifestyles and everything I was sold to. The idea was simple. I was in college. I needed some money to make. I needed to make some money. I was not really interested in engineering. So that's where trading came into the picture. And that 3,000 rupees capital became around 500 rupees in just 2 or 3 weeks of time. And that it was a pretty learning experience. But by the time we were 4th years in college, that's also when I met my co-founder Ritvik as well. We've been trading together ever since. So by the time of 4th year itself, we were making around 1,000 rupees per day. That 5,000 rupees capital, 3,000 became 5,000, 10,000, 50,000, 1 lakh, 10 lakh, 10, 20 lakh. We're trading on a 20 crore capital right now. And it's been, and one other thing is that I became a funded trader at this firm called Zintra. That's an US based asset management company where I assets, right? So that's where we introduce you guys to the funded programs as well. That's where our Indian expansions came into the picture, where we train a generation of traders who uh, who we give money for trading as well. So the idea is simple, guys. The first thing I want you guys to get out of the picture is that usually when people think about traders learning curve, right? Learning curve or your career path, basically, right? People think that a trader. One of the key problems that people believe is that there's no fixed career path for trading. That is, people believe that you have to put in your own money. You put your 1 lakh, then you make that 2 lakh, then you make that 5 lakh, then 10 lakh. You always want to have that feeling of doubling your capital as soon as possible, make the highest returns and all these things, right? You have pressure side. This is usually not scalable. This is usually not scalable because you're taking a high risk, and you'll eventually at one point of time, you will scale up to 5 lakh or 10 lakh or something. But within 1 or 2 big loss days, big bad weeks, you have the chance to actually wipe out your capital. It can really happen. So what we recommend is a different style, which is you can be a funded trader. That's what we do for traders right now, which is funded trader is nothing but you just focus on the skill of trading. Focus on the skill of trading. What I mean by this is that if you can make 300 rupees from a capital of say 3000 rupees, okay, you're putting in 3000 rupees and you're making 300 rupees in a month's time. Okay, so in 1 month you're making a 10 percentage ROI. ROI stands for return on investment, right? So if you're making a 10% return on investment on a $3,000, 3,000 rupees capital, that is 300 rupees. You're just making 300 rupees from the capital in a month's time. Then if you can do this repeatedly, what you have to realize is that instead of putting 3,000, 3,000 gave you 300, right? If you were putting say 1 lakh, the same trade would have given you 10,000 rupees in profit. If you were putting in 10 lakh, the same trade would have been giving you 1 lakh in profit, right? The same trade, if you were taking say in 1 crore or 10 crore, this would have given you 10 lakh in profit. So what you have to understand is that the market is scalable. Whatever strategy that you apply, and how, if you are able to just make 300 rupees every month, you're a good trader, right? If you can actually make that happen a month on month, firms like us, we will give you capital for trading, right? Your money is not at risk. We will give you capital ranging from $10,000, that's around 10 lakh, which goes up all the way to $200,000, right? So that is where, so the idea is simple. On this $200,000, okay, on this $200,000 account, take the same trades, make an ROI of 10%, right? This will give you a net profit. This will give you a profit of say $20K. Cool. This $20K, the profit split is like 85% for the trader and 15% for the firm or the prop firm that we are talking about. So the best part is, if you make a loss on this, if you make a loss, it's covered by the firm. Okay, it's covered by the firm. This is what the funded trader programs looks like. So this is there across forex markets, crypto markets, as well as US markets, and we ourselves run funded trader programs as well. So the idea is simple. If you are a talented trader, if you just can start with say 3,000 rupees capital and make 300 rupees out of it every month, just prove that same skill on a simulator, right? The funded trading, the funding exam as we call it, the funding exam is something where you will be having a simulator with say a $200,000 capital, right? Just prove your skills on this $200,000 capital, achieve your target. The idea is simple. Like for example, in our funding exam, you have to make a target of $4,000, right? That is 2% return of investment. At the same time, your max drawdown or your max loss, this is what we call as a drawdown limit, right? This drawdown should not cross to what $2,000. That is 1% drawdown, right? This is the our version. There are different versions out there in funding programs also. Usually it's around 8% ROI and say 4% drawdown, right? These are the usual models. Whatever it is, what I'm trying to tell you guys is that just if you're able to focus on the skill of trading, put in say 3 months time or 6 months time, focus on the skill of trading, make sure you're able to achieve at least 2% ROI every month, right? Maintain risk management, maintain how to take a trading setup properly, continually do this. You will get money for trading from prop firms like us. And all you have to do is just trade on that, repeat on that. In our model, if you start with $10,000, every time you hit a 2% ROI, you will get $30,000 next, right? And then after that, you'll get $50,000, $50K, then $100K. It's a one-time scalable model, right? This is how funded trading programs usually works. It's across all markets. I'll tell you how all of these things work. So just wanted to let you guys know this is what you guys are working towards. Like, I don't first change in perspective that I want in you guys is that you don't have to trade for your own money anymore. You can trade with other firms' money. That is what prop trading is all about. And with that, make the returns that you want. Right. So here, so start. My advice to you guys: start taking up trading as a part-time skill. Also, make up your skill to learn trading properly, and then get yourself into this position where you can achieve these targets. Become a funded trader, even as a part-time itself. And once you cross maybe say 2x of your salary from these funded accounts itself, that's when you can switch out to being a full-time trader as well. Right. So this is usually how a career for a trader looks like nowadays. Great. So now that's out of the picture. I hope you guys know what you guys are in for. Now let's get learning on how each of these things work, and we'll go through all the markets one by one, right? So we're going to first have a brief overview about what the different financial markets are and how you would have heard about equity market, stock market, or the financial markets, like forex market, crypto market, all these things. We're going to have a quick rundown on how each of these things work. 1 second. Okay, so let's start with the financial markets. I'll give you these notes on the side so that you guys can keep a note. So let's start with the financial markets. To understand how a financial market really works, let's look at an example of a farmer's marketplace. A farmer's marketplace is a place where there is a buyer, that is me, the consumer, right? The consumer comes to this marketplace. He wants to buy vegetables and fruits from the farmer. Similarly, there's a seller. Seller is the farmer himself. The farmer comes to this veg marketplace with his vegetables and fruits he got out of it farm and then sells it to different people over here. So in essence, there are just three components. There's a buyer, there's a seller, there's a buyer, and there's a marketplace where this exchange is happening. A buyer, seller, and marketplace is what constitutes a farm marketplace. Now, depending on what the product is, here the product is vegetables and fruits. That's why it's a farmer's marketplace. If the product was fish, then it's a fisherman's marketplace. If the product was wood, it's a lumberjack marketplace, or whatever the product is, we have different marketplaces for that. So similarly, if the product is financial products or financial securities, as we call it, securities is one of these fancy terms they use in the financial world to confuse the normal people. It simply means any type of financial instrument. This could be your fixed deposits. It could be instrument, or this could be a fixed deposits. This could be a bond. This could be stocks. This could be even say cryptocurrencies. Each of this is called as a financial security, right? Securities. Now, so imagine the farmers. I mean, sorry. Imagine the financial marketplace as the broad umbrella. There's a huge umbrella. Under this umbrella, there are so many different criterias of things, right? So under this umbrella, we have stocks. One of them is the stocks or shares of companies. If you're buying and selling shares of companies, this is what we call as the stock market, or in the financial world, we call it the equity market. Okay. Equity market. Equity stands for ownership. When you buy and sell different ownership of a company, that's what is called as the equity market. As you know, there's people like this is the most famous market in the world, the stock market. It opens at 9:15 a.m., closes at 3:30 p.m. Within this time, you can enter and exit your trades. This is what a company basically looks like. In simple words, if you believe that this company will become big in the future, I will put my money on it. So when the company grows, even your money grows. That's the concept of stock market, but a lot more into it. Let's talk about that soon. Similarly, there are other markets also. One of those markets is what we call as the fixed income market. Okay, fixed income market meaning that the most easiest example, we also call it as the debit market or credit market also. Different names are there, or the bond market, right? So the most commonly used example for fixed income market is fixed deposits. People love fixed deposits, right? As the name suggests, it's a fixed income market. FDs, because FDs usually have an interest rate, right? Interest rate of say 7% or something per year, right? This means that if you put in 1 lakh, your 1 lakh will become 1.07 lakhs at the end of the year. This is a general idea behind a fixed deposit. People love it because it's safe, it's guaranteed, right? These are the terms that comes into everyone's mind when they think about a fixed deposit, right? Now, what you have to understand here is these are taxable also. You have to pay 30% tax on top of your tax, depending on your tax level actually, but all of these things. So that's your fixed deposit side of things. Now, what you have to understand is that fixed deposits are actually the worst financial instrument when it comes to the fixed income market. There are much better things. There is something, for example, like government security bonds. Okay, government security bonds, or we call it as GSEC bonds. So when the government of India wants to build a new highway or build a new power corporation or something, they don't take money out of their treasury and put all that money inside. Instead, they raise money from the public and they give, just like a fixed deposit, they give an interest rate for the public who's depositing the money with them. So this interest rate is usually higher. You can get up to even say 10% per year, right? And at the same time, these are considered to be the safest bonds. Only if government of India collapses, only then these bonds will fail. Even in your fixed deposit, right? If a bank fails, you're only liable to get back 5 lakhs of your fixed deposit cash. So there's even a safety aspect, even in fixed deposit. Government security bonds are considered to be the safest out of them all. And these are tax-free as well. Whatever gains you make, you don't have to pay tax on top of that. So it's much better option than fixed deposit by every way. Just that people don't know about where to buy it and all these things, which I'll show you guys. That's government security bonds. Similarly, there's also something called as corporate bonds. Corporate bonds is where companies can also raise money. Companies can raise money from the public at an attractive interest rate. You can get up to even say 11 to 12% per year from these kind of interest bonds. These are also it depends on the company. Safety depends on the company. If it's a good company, most of them are safe. So I'll show you the platform where you can buy basically all the safe investments, but these are taxable also, just like fixed deposit. But if you compare between FDs and corporate bonds definitely gives a higher interest rate and at the same risk level itself. So first website I want to introduce you guys to, I'm going to be introducing you guys to a couple of websites today's session. So first one, let's start with uh, okay, so first website we'll start with win12.com, right? So we're talking about corporate bonds. This is an initiative by Zerodha itself. Corporate bonds, the issue is that some of the any company can issue out corporate bonds. You got to be sure about which companies to invest in. So this platform basically picks out all the best companies when it comes to corporate bonds, and they put them under one platform, right? So you can see this is Ugro Cap. It's giving 11.25 percentage. There is Five, which is giving 11.5. There is Crazy Bee at 11.75%. Mahavir at 11.75%. So all of these are different examples of investments that you can make, right? And investment size usually ranges from, some of them investment amount is say 1,000 rupees. Some of them might be even say 1 lakh rupees also. Now, here's the interesting part. Here's what you guys can actually do. The corporate bonds are useful. I'll just put in this website, win12.in, right? So first thing I want you guys to understand is that you can use corporate bonds if you want to be someone who is a risk-free investor, like someone who has no risk appetite, who do not want to, you only want to put all your money into FDs, but you know FDs don't give the best returns. You want some aggression, but not just the FD way, right? So usually we are talking about bonds in this session because risk-free investors, the easiest thing to do is like buy into different bonds like this, buy into bonds, corporate bonds, which give monthly interest. Okay. For example, in this platform itself, let's have a look at say Crazy Bee or something. You can see the repayments, the interest is repaid monthly. Okay. This means that every month you'll be getting an interest paid out to your account. Okay. Some of them are yearly, some of them are quarterly also, but even you can get monthly returns as well. So one of the simplest strategies that people use is that they use all their investments into the corporate bonds itself to get this security or the, so that no money is lost. With the interest is rotated with the interest that they get monthly there. The interest is rotated out to the stock markets every month, out to the stock markets. Okay. So this way, we are only risking only the interest portion of our income. Our main capital is always safe. We don't have to risk anything. At the same time, the interest is the only thing that we start investing in the stock market with, right? So this way, we have the aggressive portfolio being built in the stock market. At the same time, we have our defensive portfolio, which is our corporate bonds, which has been built in the long-term investment side also. So this is one form in which people who do not have a high risk appetite, who have a very low risk appetite, these people can use this kind of strategy to actually create the market, right? So this is all about corporate bonds. A good website is win12.in. Similarly, if you want to buy government bonds, you can check out the fixedincome.com. I'll just put it in the notes here also, right? The fixedincome.com. Okay. So in the fixedincome.com, you guys can find, let's go to the bond section. You can find government guaranteed bonds. Okay. So now you can see there is 10.55% given by Meghalaya Meghalaya government. This is Uttar Pradesh Power Corporation is giving around 10.15. There is even 9.70. Andhra is giving around 9.62. Uttar Pradesh at Kerala Infrastructure at 8.95, right? So you can see the minimum investment amount on these tickets also. These couple of these bonds will start at 1 lakh. Some of these may start at say even at 10 lakhs, right? So that's the only problem with government security bonds. So earlier, the entire bond market was inaccessible to the public. That is, the minimum investments, even if it's for corporate bonds and everything, started at 50 lakhs. That's why everyone started using fixed deposit. Due to players like Win12 and some other platforms, they have reduced the entire ticketing system. Now you can start investing as low as 1,000 rupees as well. So the times have changed. The education is catching up. That's why there's going to be a shift from FDs to bonds pretty soon. So the only thing I want you guys to take back from this is that if you are thinking about FTs, start thinking about bonds, right? And yeah, rotate out if you want an aggressive portfolio for the investments that you make out of the returns that you make in your interest, rotate it out of the stock market. Cool. So that was the product about the fixed income market. Now let's talk about different market segments. Like for example, there is the Forex market. Okay, or it's also called as the currency market. They all refer to the same thing. Easy. So how forex market works is, this is the biggest international market. Okay, this is the international market. International market, it's by 7, sorry, 24 by 5. That is Monday to Friday, it's open. You can trade at any point of time, even maybe day, even after your working hours, you can basically trade in the forex market itself. This is the most biggest international market with over $5 trillion of transaction happening every single. That's how big the market size is. It's the most popular market as well. So to understand this, check out USD to INR. One US dollar is how many Indian rupee? You can see one US dollar is 83 or 84 rupees. But over time, if you notice it, at one point of time it was 65, at one point of time it was 70, 54, etc. If you look at USD to Euro or Japanese yen, right? One USD was say was around 158 Japanese yen at one point of time. At one point of time it was 133 Japanese yen. You can see it's going up and down according to the market trends, right? So this is what we call as the forex market or the foreign exchange market, forex market, right? Here is where all the currency pairs in the world are listed, and you can trade across each of these currency pairs. So we'll see how all of this also works. It's a fascinating market. You can trade anytime. Then also we have the crypto markets. This, as we know, all know, crypto markets are a very interesting market because it's 24 hours into 7. That is, you can trade even on Saturdays and Sundays as well. And you can trade any point of time. It's a pretty huge market, pretty crazy market as well. And crypto, although that everyone has this notion that crypto is a scam, crypto is going to go down and all these things. Crypto is also, just like every other markets, has a market cycle. That is, cryptos follow a 4-year market cycle, in which every 4 years, it's a 4-year market cycle. Every 4 years, there is going to be a big boom up. There's going to be a big crash as well. Stock markets usually follow an 8-year cycle, right? Cryptos are usually a 4-year cycle, and so on. So we'll talk about time cycles and how long a stock will go, these things as we go along in the sessions. Anyway, so that's just about the crypto markets. Pretty fun international market and a lot of good currency pairs and everything in this. So crypto is actually in a bull market right now. It's likely to continue its bull market up also. We'll talk about that towards the second of the session. I'll give you a crypto portfolio to invest in for the crypto bull market that's coming in. Just put it into those set of coins for the long term. That'll be during the end of the session. Anyway, so that's this crypto market, and this is pretty much all the markets. There is one more market that people in India especially love. This is what is called as the futures and options market. Okay, derivatives market, FNO market. Okay, so this high reward market. Okay, high risk, high reward market, meaning that this is where if you put in 1 lakh rupees, you have the possibility to make even say 1 lakh in a day's time, or even more than that in a day's time, right? If you put in 1 lakh rupees, you also have the possibility to entirely lose that 1 lakh also, in the same one day, in a day also. In other words, these are the kind of markets where you can get very lucky, make a lot of money. At the same time, even you can easily lose your entire money capital as well. The high risk, high reward market. Now, the reality is this is very attractive, especially for beginners. But this is where 99% of traders lose money in the market. This is an extremely difficult market to crack. Okay. So the idea is simple. When it comes to the equity market, this is what like in the normal stock markets, it's much more easier to be profitable and everything. If you're putting in 1 lakh capital, right, the kind of profits that you make in a day will be around say 4,000 to 6,000 rupees on an average, like a normal thing itself. But on these kind of 1 lakh capital and everything, the kind of returns you make would be around say 15K to 20K or something like that, right? So their returns are also high. The return expectancy is also high. Whereas in the other case, if you're losing money, when you're losing money here, you'll be losing only say 1,000 to 2,000 rupees in a trade. Whereas in the other market, you'll be losing money upwards of say 8,000 to even say 20,000 or more. So if you can't manage your loss, if your risk management is weak, you can blow out your entire capital also in a single day's time. Now the reality is, so here's the reality. Okay, so people love getting into FNO market because if they can crack it, it's a lot of money and everything. So a couple of reality check is that it's going to at least take you 2 years of consistent trading every day to actually be profitable in the FNO market, right? So FNO derivatives market, it's not because you don't have a trading strategy. It's because of the psychology involved and the risk management involved. Here's a simple maths, okay? FNO people love it because, quick returns, like, you put 1 lakh in, you make 10,000 out in just 5 or 10 minutes of time. Pretty crazy, right? Awesome. But what you have to realize is that, let's say you have an accuracy rate of 85%, meaning 85% meaning that 8.5 or almost 9 out of 10 trades are correct. Okay. 9 out of 10 trades, you're correct. Almost all the time, you're right. Okay. That's awesome. But what happens is that even at this kind of accuracy level, there's an analysis called Monte Carlo analysis, which is a simulation of say 1,000 different times in which the same thing is simulated across different market points. At this point, also there is a chance, even with a 85% accuracy, there is a chance for you to have losses in a day, losses, losing days. Okay. This means that I'm not saying it will happen today, it will happen tomorrow. It may take 1 year time, it may take 2 years of time. With the same strategy over time, even if it may be after 4 years also, there will be 1 week in which you make continuous 8 losses. 8 times you make continuous losses. Okay, this is the rule of maths. If this 8 consecutive losses is bound to happen, when that happens, if you are losing, say, 8,000 or 10,000 rupees in a single trade, 8 consecutive losses will definitely wipe out your trading capital. This is why FNO trading becomes riskier and riskier. If people are expecting huge returns, like with a risk of say 10% risk per trade, right? All of this cannot be scaled up. It's impossible to scale up this way. There's a right way to scale up these things. There's something called as position sizing and all these things in which you scale up in the right risk management practice. So what I first want you guys to understand is that if you are stepping into the FNO market itself, if you're sure that you're hellbent that you want to crack only this market, it takes your time, but you can make it if you can put in 2 years of effort. This 2 years is for you to refine your trading strategy, your risk management, and most importantly, your psychology. Psychology meaning that you need to have that brain, you need to have that willpower to actually stick to your trading rules and push yourself through the hard times and the good times. So this is how a trader's path would look like in terms of an FNO trader, right? Generally in trading, right? The first few months or the first couple of trades, you will have that euphoria phase. You'll be making profits right off the bat, right? And your strategy is working, you're perfect. Then you start counting, okay, if I can make 10,000 rupees in a day, I can make 10,000 in 20 days. In a month's time, I can make say 20 or 2 lakh. In a year time, I can make 24 lakh. Then, compound that. That's usually the mentality that beginners go for. Doesn't work. That's the euphoria phase that you call. Okay. That's the euphoria phase. Usually after the euphoria phase is when the downtrend of the market happens. That's when you start making continuous losses. Here is where your confidence gets a hit. And then you start clinging on to ego at this point of time. Like your analysis should be right. It cannot be wrong. That usually leads to a lot of despair and a lot of more losses. You will initially start losing your capital. You lose how much ever you put in. You'll start putting in more. You lose that as well. This is the despair phase, the fear phase and the despair phase. This is where most traders quit. Okay, this is where it becomes a test of patience and that learning mindset. If you can actually overcome these mindsets and if you can put yourself on the right path through a disciplined manner, it won't be the euphoria phase anymore. It will be a slower growth, but it will be a consistent growth. This is the kind of trading curve that usually happens, right? So this happens through a mindset switch, a psychology training and everything, understanding your emotions like fear, your greed, all of these things. That's the right path to be a profitable trader in the futures and options market. Again, this is for the high risk, high reward market. Equity, normal stock investing and everything is actually very simple compared to that. For normal stock market, you can expect to be profitable within say 6 months to 1 year of time. Generally, that's usually a good time for you to put in the markets. All right. So I hope this gives you a brief idea about how every market works and what is expected out of you to be a good market trader as well. Okay. With that in mind, let's move forward now. Let's go to the next part of the session. Here is where we will dive into each of these topics one by one and understand how each of these segments work and how we can actually make profit from these segments. So the first, okay. So when we talked about trading and the stock market, or just a quick brief, let me just show you something before that. This is trading view. So let me just show you all the charts. Okay, just a general chart. So this is what a stock market chart would look like. Let's take a stock like Britannia. This is ICICI Bank. Okay, let's look at the ICICI Bank's chart. Okay, sorry, this is Britannia. Let's have a look at Britannia's chart. Just a quick walkthrough. X-axis is your time. Y-axis is your stock price. There are green and red candlesticks. Green candlesticks means the price is going up. Red candlesticks means price is crashing and everything. We'll learn how to read these things and everything as we go along the session. Anyway, so this is the Nifty 50 Britannia card chart. Let's look at some other things as well. Let's have a look at um, let's have a look at some forex currency pairs. Forex as in, let's have a look at Euro USD. 1 euro is how many US dollar? 1 euro is 1.102 US dollar. Oh yeah, let's have a look at USD Japanese yen, right? You can see 1 US dollar is 147 Japanese yen right now. But here also price is going upwards, price is going downwards. In other words, if you didn't know that this was Euro USD, if you just had the chart in picture, if you just had the chart, you couldn't say what is different. You couldn't say what is different between USD Japanese yen, or you can't say that if it's USD forex market or stock market or crypto market. Doesn't matter. Like even if you look at crypto charts, right? The charts that you see are pretty much the same itself. It's just red and green candlesticks. Nothing's different. Only when we say that, okay, this is Solana USDT, only then you will understand, okay, that's a cryptocurrency pair. In other words, trading is nothing but we're just looking at the charts. We're learning to analyze the charts, understand what is happening on this chart, and figure out if it's going to go up or go down. Okay. In other words, trading is a video game. Okay. It's a video game. It's like a betting game. It's a betting game where you have a lot of strategies. The video game comes with the rules and instructions. These rules say that, okay, superpower. There are so many super, attack moves that you can do. You can have an attack move called the opening range breakout, or, different kind of trading strategies are your attack moves. With this attack move, you can predict if the price is going to go up or price is going to go down. Okay. So your trading strategy is what is used to predict if it's going to go up or pretty going to go down. Now, just like how you bet on things, right? Let's say you're putting a bet with your friend. You say that, okay, bro, let's have a bet 20 rupees if the price goes up till here. Okay. Similarly, if the price doesn't go up, you're going to lose that 20 rupees as well. Something similar. Here is where you're betting at the market saying that price is going to go up. Okay. You say bet that you're going to buy the stock, betting that it's going to go up. If it goes up, you make money. If it does not go up, you lose money. Simple. This is what happens in investing as well. But when it comes to trading, you can also bet in the lower direction. You can bet that price is going to crash. Okay. This is what is called as short selling. You can short your stock or short sell your stocks. Basically, just sell the stock first, right? Even if you haven't bought the stock yet also, you can just directly click the sell button. That's how we short sell the stock. It's simple. In other words, even if you expect the prices to crash, you can short sell the stock, and how much of it crashes, that's your profit. At the same time, if it goes up instead, that's your loss. Okay. So one of the advantages of trading is that you can bet in both direction. Even if it goes up, you can make money. Even if it goes down, you can make money. That's through short selling. So that's the first thing. So my first understanding is every chart is pretty much the same. You just have to learn how to read the chart to identify when should I enter the market, when should I exit the market, when should I enter, what should be my exit, my target, exit, what should be my risk, how much loss should I take, risk or your stop loss, right? All of these things we'll keep covering as we go along the session. This is what a trade looks like. A trade is where we have an entry point, we have a target in our mind, we have the risk also we are taking in our mind. So different strategy, like the video game in which we have different attack moves. Those attack moves we use to predict what the market is, and we time the market based on that. That's what trading is in a nutshell. It could be across any chart. We just look at the chart, understand what the chart is telling us, and we take all the trades. Okay, so that's the first thing that I wanted you guys to know. Now let's have a look at these markets one by one. The first market we look at is NSE, or which is the stock market itself. So in the stock market, right? It's nothing but a supermarket. Like imagine a supermarket. You're just walking in the supermarket. On the supermarket, instead of Lay's, Kurkure, and all these things, on the shelves you find Tata Motors, Adani, HDFC Bank, ICICI Bank. All these super companies are there on the shelf. Whichever company you want to be a part of, take one, put it into your basket. Right? Put it into your basket. Keep going. This is what the stock market pretty much is. So this stock, the supermarket that we just entered, right? The supermarket is what is called as a stock exchange. Okay. And the stocks that we put into our basket, right? We had a basket with us. That is what is called as your portfolio. That is your collection of stocks. Okay. So in India, we majorly have two major supermarkets. One is NSE, National Stock Exchange. The second one is BSE, Bombay Stock Exchange. These are just two different supermarkets. You can buy the same packet of Lays or Kurkure from either, say, Reliance or Big Bazaar, right? Same thing. You can buy the same share of Reliance or HDFC Bank from either NSE market or BSE market. Just two different supermarkets, right? It's not just NSE, BSE. There are so many other ones also. There is Kolkata Stock Exchange, Madras Stock Exchange, Metropolitan Stock Exchange. But the prominent ones are NSE and BSE, and NSE is the top. So NSE became the top also because of a few reasons. That is, BSE was founded back in 1875, hundreds of years old, but NSE came up in 1992. So what happened was that BSE came from the time of where you had to go to the stock exchange, you get a physical certificate, then only you get the cash and all these things. But the problem is that if you lose that physical certificate, you lose all your money. So people, when they moved houses and everything, they lost a lot of shares and everything. There was a lot of problems. So that's when NSE came up with a system where they introduced the internet system, which is fully automated electronic trading system. They said, guys, don't come into the stock market anymore. Sit at home, buy from the stock market itself. That's what we see right now. All our dashboards right now. This is basically NSE's what NSE found. This is where if I want to buy IRCTC, all I have to do is just click on buy button. This is Zerodha platform. Just click on the long term. Long term means that you can see one stock price is around 924 rupees. If I want to buy 10 quantities, I require 9,200 and something. If I require 100 quantities, I require 92,000. Straightforward, right? Your Demat account is like a Paytm wallet. You have to add funds into your Paytm wallet. With those funds, you can buy different shares of companies, right? So you can see if I want to buy 1,000 quantities also, that's 9 lakh 24,000 quantities and everything. That's pretty much it. Buy one stock, click market, meaning that at the market price, I can buy it. Just click buy. This is how simple it is to trade now. This system was what was introduced by NSE, and that's how NSE took over the market. Okay. So there's also a thing that you'll notice here, which is benchmark index. Bench index is nothing but a collection of a professional collection of stocks. Okay. There's a benchmark index over here, which is a Nifty 50, right? I'll just open the chat. Can you guys tell me what the Nifty 50 means? Can you guys tell me what Nifty 50 means? I'm looking for a particular word in the definition. Let's see, guys, if we can get that. What is Nifty 50? Top 50 companies, top 50 companies, top 50 companies. Yes, top 50 companies. The leading 50 stocks of BSE. Okay, top 50 listed companies by market cap. Perfect. There is Aditya who got it, which is top 50 companies by market cap. All right, nice, guys. By market cap. Now it's coming out. Yes, perfect, guys. As you guys said, it's exactly as you guys said. It's like now Nifty 50 is the top 50 companies by market cap. Okay. So there's a new word that coming up. So you take your Adani's, HDFC banks, ICICI banks, all the top biggest companies in India, put them under one single basket. Okay. Put them in one single basket. This basket is what is called as top and Nifty 50. It's the top 50 companies in the NSE market by market cap. Now, what is market cap? Market cap stands for market capitalization in short, right? In short, we call it market cap. It's nothing but the total market value of a company. Okay. Meaning you may have heard Tesla is a $1 trillion company, Microsoft is a $1 trillion company, Apple is a $1 trillion company. We're all talking about the market cap of the company. Now, market cap plays a very important role. So, in definition of the formula wise, is basically total number of shares for that company multiplied by the stock price. So that shows the worth of the company, right? According to the stock. So, and yeah, so that basically shows about the total worth of the company. So that is total number of shares. So have a look at screener.in. Screener.in is the website for us to, it's a very good website for fundamentally looking at any company. Okay, let's go to the screens tab. And yes, the session recordings would be provided at Monday. You can see the screener.in. You can see the different sectors of the business. You can see aerospace, all these things are there. Let's have a look at banking sector, for example. Okay. Under the banking sector, you can find different ratios and all these things. Forget about all these numbers on the screen. It may look a little confusing, but it's simple. But just look at the market capitalization column for now. Okay, which is HDFC Bank, State Bank of India, Axis Bank, all these different companies are there. Now, market cap of HDFC Bank is 1,24,000. Sorry, 12,43,000 crores. Okay, that's how big HDFC Bank is. ICICI Bank is around 8,35,000 crores. State Bank of India is worth around 7,24,000 crores. That's the net worth of these companies. Okay. So if I go down this list, so HDFC Bank is the industry leader. The number one bank in India is HDFC Bank. Second is ICICI Bank, etc. If you go down this list, you can find companies like, say, Karur Vysya Bank, which is at just 17,000 crores, which is a very big difference from HDFC Bank, right? If I look at companies like, say, South Indian Bank, it just has 6,000 crores. Or let's say Capital Small Finance, only 1,340 crores, right? So based on this, there's a simple observation that is, based on market cap, we have different types of companies, right? We have different types of stocks. So we have the large cap stocks. Small cap is there. Okay. So large cap means that if the market cap is greater than, say, 20,000 crores, these are considered to be large cap companies. Okay. You would have heard blue chip companies and everything, right? The large cap companies are called blue chip companies. So if the market cap is greater than 20,000 crores, that's blue chip company. Large cap company. And the average returns you can make is around 15% per annum here. These are established companies, right? If you look at these company names here at the large cap sector, everyone knows about Punjab National Bank, Axis Bank, and everything. Everyone knows about them. These are established companies, right? These are considered to be safe investment, considered to be safe. People, when they talk about long term, right, they say, okay, HDFC Bank and everything will on the long term will always go up. ICICI Bank will always go up in the long term. So these are considered to be safe because even if something wrong happens in the market, they have so much bank balance, such good team and everything. They'll do something, the company will survive after 50 years. That's the assumption. Okay. That's why they're considered to be safe. Considered to be. They are not safe, actually. I'll tell you why. Anyway, these are large cap companies are used for wealth conservation, wealth preservation. Okay, I'll tell you what that is soon. Similarly, the mid cap and small cap are what we call as aggressive stocks. These are used for wealth creation. Okay, the idea is simple. If you want to make a lot of money from the market, if you invest into, you would have seen so many memes which said, if you invested $100 in Apple in 1900s or 1990s, you would have become a millionaire by now and all these things, right? So similarly, if you invest into Apple today, that's not going to make you a lot of money. The thing is, these Apples and Googles and everything still exist, but these are your mid cap and your small cap companies. They are growing companies. People don't know about them yet. They will become big in the future, but it's not out there yet, right? So that's why they are called mid cap That's why it's called aggressive stocks, because these companies have the potential to create a lot of wealth. These are wealth creation companies. When the markets expand, they give the highest returns. But at the same time, when they crash also, they give the highest crashes as well. That's why they're called aggressive stocks. But let's look into a little bit of what aggressive stocks means, okay? So mid-cap stocks are where if the market cap is between, say, 5,000 crores and 20,000 crores, they usually come under mid-cap criteria. Now, for a mid-cap company, the average returns that you generally see is around 25% per annum, okay? Now, these are considered to be riskier because, they are growing companies. They may or may not last through time and stuff. That's the risk of investing into these companies. And finally, the small cap companies also exist. This is where market cap is less than 5,000 crores. Small companies. And the returns that you make here is my average returns around 35% per annum because higher risk and everything. Riskiest companies, right? But these are small companies which may or may not last through time, right? Very high risk investments and everything. These are considered to be penny stocks and everything usually come under this criteria. Okay. Now, the reality is, first of all, long-term investing completely is a myth. There's nothing called as a safe company when it comes to direct stock investing. And if you want to create a portfolio, the why we are talking about small cap, mid cap, and small cap is, mid cap and small cap is because you have to choose about what kind of an investor you want to be first, right? That is, if you want to be a person who is risk averse, generally people say that by age it's profiled, but it actually depends on you as a person. General criteria is that if you are between, say, 18 to 35 years of age, right? At this point of time, almost most of your money, almost 70% of your investment should be in stocks itself. Rest 30% can be in bonds and all these things. But whatever it is, this 70% into stocks, 70% of that should be in the mid cap and small cap sector. Most of your money should be in mid and small cap sector. Only 30% should be in large cap. Okay, this is the general idea for a portfolio. This is because at the young age, you have high risk appetite. You have a high risk appetite. Okay, high risk appetite because even if you do something wrong financially, you still have 20 years of work life ahead of you to make up for all the mistakes. That's why you have a high risk appetite. That's why most of your money should be in mid and small cap. Whereas if you're in the older criteria, that is, if you are above 50 years of age, okay, you have a low risk appetite because you have a family dependent on you, you have different people relying on you, so many different things comes into the picture, so it's much harder, right? So most of your money should be in bonds and all these things at that point of time. The rest 30% you can play in the stocks, cool, but almost 70% of that should be in large cap sector and 30% in mid and small. Just a reversal of all these criteria, simply put, the same thing itself, right? So this is what a simple returns would look like. Let me just show you a portfolio which is around 2 years old. Again, just timing the market's pretty there and there. A lot of different case studies from these examples itself. Like what I first want you to understand is that check out the return section. I've exited this portfolio. I'm only holding 1 or 2 stocks to track the stock. But you can see most of the companies that has given these 500%, 800% return, all these are in a 2 years of time. You can see UCO Bank, Deepak Fertilizers, all these things. First thing I want you guys to notice is that these are not large cap companies. Most of my stocks here are mid and small cap companies, which has given these returns. Okay. In the large cap sector, the stocks along the same time, all of these are the same time investment. ITC gave a good return, which was around 138% returns, which was a good cash that I caught, I think, 2 years back. State Bank of India also was 2 things which I caught at an undervalued price. Whereas when you look at the other large cap sector, Bharti Airtel only gave 83% the same amount of time. ICICI Bank only gave 71% of the same amount of time. I think, yeah. Most of the large cap Hudson like gave for 57%. What I wanted to notice is that large cap always grows at a smaller rate, whereas your mid cap and small cap are the ones that pushes your portfolio like anything else, right? So your bets should actually be in the mid and small cap sector if your focus is on wealth creation. Okay. But then people talk about risk involved, right? People talk about how large cap is like, people talk about large cap is the least riskiest thing and all these things, but let me just break out some myths first, right? So the myth number 1 I want to break first is that people talk about, first of all, people saying long-term investing is, is the best, or, long-term investment is very safe. Okay. There are certain assets. If you invest into Nifty 50 for long term, then it's completely safe. That is the best returns. I mean, it's one of the easiest hacks in the market. Just keep buying Nifty 50 over time. That's a very long term investing. It's completely safe. But long term investing on direct stocks is not safe. Okay. Even though if it's a large cap company, people talk about Nifty 50, top 50 companies in India, right? Over time. This has been there since 2000s, 1900s, in fact. Okay, 1992 or 1993 it started. From then, Nifty 50 existed, right? 50 top companies at that point of time. Out of these 50 companies, 20 years later, that is in 20 years later, out of these 50 companies, only 8 of them are still in Nifty 50. Rest all crashed. In other words, 42 out of 50 large cap companies has failed in the last 20 years of time. Okay, and this trend will continue for the next 20 years as well. So when you think about 20 years later, it may seem like a big company right now, but 20 years later, it may definitely crash. Okay, so long-term investing, like when I talk about this, my dad is the one example that comes to my mind, which is he played very safe with the corporate manner, but when it comes to stocks, all his investments he has done from the past, like when he was working, I think 20 years back or something, everything, none of them actually given him returns. All the stocks has failed. He always talks about how he has bet on the wrong stocks all the time. So the reality is that if you're looking at long-term direct stock investing is actually pretty hard. That's why you need to go for positional trading or momentum investing. Okay, when you're investing directly into stocks, it's not a buy and hold game till infinity. It's more like a positional trading play. That's what we'll be discussing in today's session. Okay, so long-term investing is a myth. In other words, there's a rule of, the reality is how the markets work is there's a rule of 80-50. Okay, this is the reality of the market is, that is, any stock that has moved up well. It could be the most fundamentally best stock out there in the world also. But any stock that has moved up well, there's a 80% chance that it will crash from the top. Extension to this rule is that there's a 50% chance it will crash by 80% from the top. We'll talk about that also. Okay. So this is the rule of 80-50. Let's take any example, like let's say IRCTC itself. This was one of the boot camp trades that we called out a couple of months back. The idea is simple. Okay, this is IRCTC. Any stock that you look at, IRCTC, as you know, it's a monopoly, right? Best stock in the country. Like no one else can beat the stock and everything. But what I want you guys to notice is that IRCTC had an uptrending run or a bullish run in between 2021 till 2020 something, right? Check this out. So fundamentally, stock is brilliant. There's no question. This stock will be there for a very long time. Yes, monopoly, everything is good. So it gave around 356% returns in just 10 months of time. Okay, and at this point of time, there are two cases that comes into the picture. There is a retail investor and there's a smart investor. Okay, smart investor or corporate crowd, financial institution, right? So what usually happens is that when the price goes up like this, a retail investor or an inexperienced investor's mindset is going to say that the money is good, the IRCTC's company is doing really well, I don't have to do anything. This company will always be a monopoly. It'll go up in time. 10 years later also, it will give me the same returns and everything, is everyone's mindset at that point of time. Okay. So what usually happens is that at this point, when they start making losses, right? Earlier they had 300% profit. When it comes down to 200% profit itself, your money psychology will tell that I don't want to exit right now. It was at 300% earlier. Let me wait. It will go back to 300%. It may go down to say 50%, 60%. You're making losses. Okay. So there are two costs that's coming into your head at this point of time. First, from here till here, price went up. Okay. For the next, how many years is this? From 2021 October until 2023 October, almost for the next 2 years of time, your price money, okay, you earlier had 300%. Now, over the next 2 years of time, it hardly became 120%. Okay. You missed out on a lot of profit. Okay, your profits actually significantly went down in 2 years of time. That is one scenario. But not only that, that's the first direct cost that we can talk about. There's also an opportunity cost that comes into the picture. That is, for 2 years of time, your money is locked into the stock. It's dead investment, and it's only making losses for that 2 years of time, right? So this is rule of 80-50 in action, where a stock which has moved up from 80, like big, from the peak, right, it will always crash by around 50%. Around 8 out of 10 times, most stocks will definitely have a peak correction of 50% from its peak. Okay, this is why exiting the stocks are important. Why? Because the corporate crowd, I mean the financial institutions, what they would do is they will capture this big return. It's not impossible. It's not possible to exactly time the top and all. They'll get it. They'll make this 100-200% return, exit out of the stock. For the next year, they don't let their money still stay idle. Find the next stock which gives them 100% return, do that, exit out of that. Then rotate it, make it go to the next stock, 100% on the next stock. Instead of lying dormant, a retail investors crowd, first year they had 300% return. Second year, it became minus 100%, so totally 200% return. By the time it's the third year, they only had 100% return in overall. 100% return in 3 years of time. That's the retail investor. A momentum investor, a positional trader, a retail, I mean, proper market participant, he is a person who would make, he won't make 300% in this thing itself. He'll get his exit around here, maybe around 200% or 120% on this year. Then exit out of this. Next year, make another 100% on the next stock. Then go for next 100% on the next stock. Right? This is how they try to time the markets to get the best results. So instead of putting your, instead of getting locked in, this is why positional trading is important. Okay, so this style of investing is what we call as momentum investing. Okay, this is why momentum investing is important, and it's actually pretty simple. It's a very simple strategy that we learned today. Okay, so this is what momentum investing is, and why long-term myth is long-term myth does not exist. You got to keep exiting out of each stock that you have. Okay, let's go to the next tab. So there's also myth number 2 I want to break at the same time. Okay, myth number 2 is that timing the market is impossible. Okay, so it's not exactly. So the next question that comes to your mind is that timing the market is impossible, but the reality is timing the market is how the entire financial institutions work. May it be your asset management companies, may it be your hedge funds, or even your firms like Goldman Sachs, even your banks like HDFC Bank, State Bank of India. On the front end, they have a loan and other operation businesses, but on the back end, they are one of the what we call as institutional investors. Okay, there is institutional investors, right? Any asset management company, any mutual funds, all your banks are financial institutions. They're institutional investors. They have thousands of crores that they deployed in the stock markets. Everyone have a trading desk with them. All banks have a trading desk. There are traders there who are trading the markets on the money. Whatever money that you deposit in the bank account, right? It's not basically there. It's basically being rotated out towards different types of markets and everything. So these are what we call as institutional investors. There are of two types: DII, that is domestic institutional investors, right? All your Indian asset management companies or mutual funds, everything comes under domestic institutional investors. The second one is FIS, that's your foreign institutional investors. Okay, so these are any companies like Vanguard, BlackRock, or even say Saudi Arabian Investment Fund. All of these are big financial institutions from foreign who actually brings in the big amount of money. So these guys basically move the market. They bring in the biggest buying pressure and the selling pressure, right? So just to show you the rule of, I forgot to mention this, 50% chance it will crash by 80% also. So this is also an example where you check this out. This is an example of BCG, which had given me around 200% return. So this is an example of penny stock expansion. People love penny stocks, or getting that right penny stock for this expansion. Check this out. This was a stock which was at 5 rupees back in 2021 April. Okay, from 5 rupees it went up all the way to 120 rupees in just close to 6 months of time. We see the returns based on this. Okay, from 5 rupees it went up, so it gave close to what, 2000% or something in just 6 months of time. Cool. If you ask me, can we time this exact top and exact bottom? That's very hard. That's hard to actually predict all the time. But is the time in the market possible? Definitely. You can actually capture this move from here to here. This is what we can actually capture. And that's around 200% returns. Okay. So the market is not about timing the exact bottom and exact top. Even if you can get lucky, there are chances that you can make 2000% returns and everything, but that's not what we're here for. But timing the market is where we use technical analysis and other strategies to get a good entry point and get a good exit point. That's what all these financial institutions do. If you say the timing the market is impossible, the entire financial institutions of the country would collapse, because the entire industry is based on beating the markets. That's what they use their knowledge to beat the markets. That's how it works. Okay, so that's pretty much it about all the main market conditions that you have to be aware about. One more thing before we move forward to the main session is how does a simple topic for the beginners, which is how does the market price move up or down? Market price move up or down, right? Usually a doubt that comes into every beginner's head. So the idea is very simple. That is, it moves up based on buyers versus sellers. Okay, what I mean by is that buyers brings in the demand or the buying pressure, okay, because of which price moves up. Buyers bring the demand or the buying pressure, which pushes the price up. Similarly, sellers brings in the supply or the selling pressure, and the price moves down. This is the general idea. I'll give you an example. So by demand and bulls in the market, okay. Buyers are called bulls in the market because buyers, when they attack, like bulls, when they attack their enemies, they use the horn them up. In other words, bulls push the price up, buyers push the price up. Similarly, bears are what we call the sellers. Bears are enemies, use their paws, storms on them or crushes them down. That's why they're called sellers or bears market. Okay. So these are the two buyers push the price up, sellers push the price down. This is what you can do. Now, a simple idea is that, for example, back in 2003, Apple developed the first ever iPhone. They unveiled the first ever iPhone, and that was the first ever smartphone. Till then, you had these QWERTY keypads, Nokia's, and everything. They unleashed the first ever smartphone, right? Obviously, everyone started buying Apple shares, Apple company, I mean, Apple products, and everyone started buying Apple shares. So there was a lot of demand coming into Apple, because of which price went up. When there's a lot of buying pressure coming in, price goes up. In fact, let's take a simple example. Okay, let's say I'm a samosa stall vendor. I have samosas with me. I have 10 samosas with me right now. Okay, and there are like 50 people in the queue. 50 people are there in the queue. Okay, the first samosa I will sell it for 15 rupees. One guy will buy and buy for 20, 15 rupees. The next samosa, I see there's a lot of buying pressure, or there's a lot of demand for it, right? So the next samosa I'll sell for 20 rupees. One guy will buy for 20 rupees also. Then I'll say 25 rupees. Since there's a lot of demand, one guy will buy for 25 also. I'll even say 50 rupees. One guy will be so hungry in this queue that he will buy for 50 also. So as long as there's a buying pressure, when there's a lot of buyers stepping into the market, price tends to go up. Okay, price moves up and up and up. Similarly, the exact opposite situation can also happen. Exact opposite meaning, let's talk from a samosa stall's point of view, which is this time, now I have competitors. There are 10 different samosa stall owners, everyone selling samosas. Okay, everyone wants to sell samosas, but there's only like 10 people in the queue. So one guy will say that, okay, I'll sell for 10 rupees. This guy will say 9 rupees. I'll say 8 rupees. Okay, so you'll come and buy for 8 rupees. So it's a competition between the sellers now. One guy will say 8 rupees, then I'll say 7 rupees. I'll even say 5 rupees. That's how the prices crash. When everyone wants to sell their stock, or when everyone wants to sell their samosas, at that point, the price will start crashing pretty rapidly. Okay, that's your buyers versus sellers analogy. Now, a simple example is the COVID-19 itself. As you know, COVID 2019, when COVID was actually released onto the, like, around here, March was when COVID was declared on the world, right? The impact of this is that from 2017, 3 years price went up. This entire thing crashed in just 1 month of time. 3 years worth of gains crashed in just 1 month of time. That's COVID-19. Okay. The reason is everyone started panicking when they heard worldwide pandemic or global pandemic like this. Everyone started panicking. Everyone started selling their shares. They wanted to be safe, right? Everyone sells their shares, causes a huge selling pressure, and causes the price to crash like anything. Okay, that's what happened. But later on, that's the demand versus supply. Later on, you can see the price kept going way further up and further up and further up after this. Okay. Can you guys tell me the reasons why for this? Can you guys tell me from 2020 onwards, price has been going up crazy high, right? Let me just open the chat. Okay. Yeah. Why do you guys think after 2020, the price just kept going up so far? Like, economy was still bad, right? COVID was still in lockdowns and everything. Why did the price keep going up like that? Demand is more, market was extremely undervalued. India is a developing country, high demand, everyone went online. Bottomed out and many new investors joined. Nice, because they're buyers. Bottom of the chart, more retail participation, cheap interest rate, nice, cheaper valuation. Vaccine came, so panic over. Cheaper valuations. Exports are greater than imports. Okay. Stable government. People had time in Corona, and now nice. Uh, People became more aware. Nice. Market went down only due to news. Nothing major happened to fundamentals. That's a really good point. Nice. The future work on the capital increased, capital inflow. People had liquid money to invest. Awesome. Great, guys. DIs became more active. Okay. Stock market awareness increased. Perfect. I think you guys got pretty much all the points right here in the chart itself. Let me just quickly recap these points one by one. Okay. So the idea is pretty simple. Guys. So which is, at this point of time, Someone said a lot of new demand came in, a lot of new participants came in. If you remember, social media was filled with 80% off on Tata Motors, 50% off on Adani. Everything was at a big discount. That's what everyone used to say, right? Like huge discount on the stock market, flash sale. So almost 3 crore new demat accounts were opened in just 1 month. Usually this takes a whole year. It got opened in just 1 month of time. If 3 crore people invested just 10,000 rupees each, that's 30,000 crores of money coming into the market. New, fresh money, which never existed before. That got imprinted in the market. More buying or more demand or buying pressure. Not only that, people who exited here, right? They realized that the companies were not that affected. In fact, due to COVID, some sectors started performing even better. IT sector was performing really well. Pharmaceutical sector was performing really well. Even though things were locked down, there was no vaccine also in sight. Vaccine and all came after 20 at the later of these things and everything. But everything was really bad. But companies and all the financials were still not so bad. They were not that affected also. So then they noticed that okay, that's also good. People started putting their money back in. Not only that, your fixed deposit, you were getting only say 4% on fixed deposit rates, which was all time low, right? So people started taking their money out of fixed deposit, put it in the stock market. So everyone's money was in the stock market, because of which it caused a huge demand or a buying pressure. This kind of phenomenon is what triggers what we call as a bull run. Okay, a bull run is when everything is bullish in the market and prices are all financial conditions or everything is pointing towards the upside. This is when the average duration of a bull run once it starts is 2.5 years, right? Here is where you can make 100% returns, 250% returns, all these things, big returns and everything happens on these bull run segment of market. Okay, so bull run, everyone is just bullish on the market, just keep buying, everything will go up pretty well. Okay, that's what the bull run is. Similarly, there's also bear runs as well. Bear runs is where when the markets crash. Okay, bear runs is where the markets crash. That is, the average duration of a bear market is usually much lower. It's only 9 months of time. Okay, but during the bear markets, stocks may crash by minus 20% or minus 50% or even minus 80%. Okay, or minus 80%. Like remember the rule of 80-50, where I also said that some stocks may crash by 80% from the top, 80% from the stock. I think example would be BCG itself, right? So check this out. BCG was a stock where it crashed after it gave the big returns and exit opportunities came in. Check out the crashes that happens, right? Like from the peak, it has crashed by over 80% or even 90% as of now, right? This is the example of BCG. Similarly, all these bear markets is where these 50% corrections. We talked about IRCTC, Wipro. All of these bear market durations is when these stocks tend to have a crash. This is Wipro stocks, same scenario, went up really well. Then from the peak, it crashed by 50%. Now it's on its way for its next bull run. We'll talk about how to time this also in today's session. It's pretty cool. A good time to start buying Wipro. Anyway, so this is so this is pretty much about the bull markets and the bear markets. So this is why the markets over time, right? If you look at Nifty 50 over the past 20 years itself, it's always been a cycle of bull markets and bear markets. Okay, there have been times where the markets expanded. Here's a bull market. Okay, you can see 2005 onwards there was a big bull market run, right? And then 2008 crash happened. Then some kind of sideways market for a couple of years. Then the next bull market, crash, next bull market, crash, next bull market. So we're at the last leg of this bull market also, right? We are still in a bull market. There was a temporary halt over here and it started again. We're still in the bull market. We are still looking at the bull market for till 2025 as well. And then then the consolidation, it may go for side trending or the small bear market also. Then it may change trends also. But currently, this is the current bull market situation. So the idea is that bull markets makes you big returns and bear markets gives you is where we have to start deciding to exit your stocks and everything, right? Now, over long term, if you look at long term, bulls always beat the bears. Okay, because bears are only for a shorter duration of time. Bulls go up, then bears crash for a smaller period of time, then again bulls go up, bears crash for a smaller period of time, bulls go up, crash. It's like that. Okay. So when it comes to Nifty 50, long-term investments are very safe. That's the first thing. So now that we are at this point, now we have a good invest idea about, okay, what are the basics, what bull markets are, bear markets are. You have two choices with you. One is you can be a passive investor. Okay. Passive investor meaning you can be a person who invests. You are very happy with your job. You just want to focus on your upskilling and all these things. Perfect. But you know that you don't want to put your money into fixed deposit. You're smart. You already know that stock market gives you the best returns. But at the same time, you don't want to be actively involved, don't want to check the charts and all these things. Simplest thing you can do is buy Nifty 50 index funds. Okay. And forget about it. Okay. And keep doing that. Like 20% of your income or how much ever you want to invest, 20% of your salary, 20 to 30, the better it is, higher it is, the better. 20% of your salary, you put it into Nifty 50 index fund. This is it. You don't have to do any more investing. This is, you beat returns of gold, you beat returns of, for example, fixed deposit in the last 25 years, CAGR is around 7.1%, 7.2%. Your inflation itself in the past 20 years is 7.1%. Gold gave a return of close to 8.2% in the last 25 years. If you look at real estate, that gave around 11%, including the rental yield and everything compounded. Like real estate again has the liquidity issue where if you don't get the location also, that's a problem. Some locations have performed even better, but in general, real estate also gives only 10 to 11%. Nifty 50 gives around 13 to 14%. 13 to 14% CAGR over the long term. Okay. In other words, Nifty 50 has been proven. Everyone in the finance industry knows this. It's been proven that it's the safest and the best investment. Okay. You don't need to have investment in gold, your real estate or anything. Just put all your money to Nifty 50 every single month. This will always go in profit. When you wake up, when you retire, this will always be in a huge amount of money. Or that'll be available for you. This is the truth of the market. So we talked about timing the market, right? Remember, we talked about timing the market is impossible, financial instruments, all these things. For example, how Goldman Sachs is an asset management company, one of the investment bankers, like JP Morgan Chase, Goldman Sachs, BlackRock, all of them are in the same thing, right? So these are investment bankers. They're all in the same. How these people work is that they tell their clients that, okay, this is the benchmark index. Okay. For example, Nifty is the benchmark index. We'll trade on top of that. Sorry, Nifty is the benchmark index. Okay. Trade on top of it. Meaning Goldman Sachs will have clients who has say $1 billion or say a couple of $1 million with them. They'll give this money to Goldman Sachs, right? Goldman Sachs will basically take this money, trade it across different trading instruments across the world, right? And they'll make a higher return. Benchmark index is something that anyone can make, basically Nifty 50 returns. So they may make around, if Nifty 50 made 10% returns on the month, okay, Goldman Sachs will trade and make say 30% in total across different credentials, right? And they trade and make 30% on top of it. So whatever this difference is, this 20% extra, that's Goldman's skill, right? That's basically Goldman timing the market, making a higher return. On this, there would be a profit split between Goldman Sachs and the client. This is how the investment banking world works, right? This is how the hedge funds and everything work, where you charge an asset management fee and where you charge a performance bonus, just like this. So benchmark index, as I mentioned, is something that anyone can make. So Nifty 50 is the benchmark index for everyone because it's been proven that if you keep putting your money to Nifty 50, you will never have to regret anything ever. I'll tell you the reasons also why. Anyway, this is the website you can buy Nifty 50. This is grow.in. You have two options to buy Nifty 50. This could be your starting step or your... One second. Yeah, this could be a starting step into your financial journey also. Even if you're in college, your starting step towards investing is to create that habit of investing. So you can check out Nifty 50 index fund here. Index fund, sorry. Okay. So you can find Navi and UTI Nifty 50. These two are the most popular ones. UTI has the highest asset management firm. UTI is the safest, has been there for a long time. You can start your SIP starting at 500 rupees. This is your first step. do this first before you start investing or anything. Just start this, and then over time, I know we have that feeling that I want to research the best stocks and keep all my money in at that point of time and stuff. Give me time for learning. I would say get into execution first. Start putting an SIP plan into, say, 500 rupees into index fund. Over time, keep putting your rotate that, and keep investing more and more into different stuff. So this is your first step as your monthly investment. You can either use UTI Nifty 50 index fund, or you can also check out Navi Nifty 50 index fund. Both of these are good. Navi is a newer platform. It has less expense ratio. That's better. Why I'm saying mutual funds is because, so mutual funds basically takes your money, right? If you give 10,000 rupees, they take your money, invest into top 50 companies on your behalf, right? They basically take your money and invest on your behalf. That's pretty much what a mutual fund does. You have one more option, which is using Nifty Bs. So buy Nifty index funds, let's say UTI Nifty 50 index fund. Okay. The second option is you can buy Nifty 50 ETFs. This is, we call it Nifty Bs. This is where you can buy directly from your demat account platform. Okay. From a demat account, you can just type in Nifty Bs. This basically tracks Nifty's movement itself. Okay. The only drawback of buying exchange from the exchange is that you can't automate your investments where it'll, like in SIPs, it will automatically withdraw from your bank. But in ETFs, you have to come in here every month and place it manually. That manual intervention is required. So the expense ratio or the charges for this ETF is slightly lesser than the mutual fund. But I prefer mutual fund itself because, like that convenience is worth it actually. Like you can just automate your investment. That is it about these things. Cool. So we are done with the passive investing side of sessions. Now we can get into active investing. All right. So now here is where the core side of the session starts, right? So we are done with the basics. If you want to just be a passive investor, you can just do this and you're done with life. The reason why Nifty 50 will always go in time, there are multiple reasons. One, as you know, India is one of the fastest growing nations in the world. That's one. Second, every year there's an 18-year-old who's actually stepping into the market. Your financial literacy rate, right? It used to be 2% before COVID and everything. After COVID, it became 20%. This is still a low number. Most nations have up to 60% financial literacy rate, meaning more participants in the markets are yet to come. More demand will come in because of which price goes up, right? So 20 years before, Nifty 50 was just at, like if you scroll back 20 years, Nifty was just at 1,000 rupees level. It was just at 1,000 rupees. After 20 years, it's at 24,000. Give it 20 more years of time, it might be at 50,000 or even 100,000 level. That's why long term, every country's focus is on India. Like India is expected to be the second biggest GDP by 2070. China will be number one, India will be number two, US will be number three. So India has so much potential. So that's why every country is betting on it. That's why Nifty 50 is always a safe bet. Okay. So that's your passive investor route. Now we can get into active investing. Okay. So active investing, we're going to directly jump into the, so active investing, we're going to directly jump into the charts, as in, there are two types of analysis that we can do. Okay. Active investing is nothing but momentum investing. We're going to start with positional trading or momentum investing. Okay. Here is where we are going to directly invest into different stocks. There are two types of analysis that we can do. One is your fundamental analysis. The second one is your technical analysis. Okay. Fundamental analysis simply means that you can read the best thing from the chart. For example, first we decide the theme of the fundamental. Fundamentals meaning that, is the company making much money? What is the strength of the company? Is the company going to become big in the future? Or what is the sector's outlook? Will this sector still live 10 years from now? All of this comes under that. Let's have a quick look at fundamental analysis. I'll tell you how to make it simple also. It's a 3-step process. First, find the theme, then the sectors, then the stocks. Okay. So I'm just going to open the chat box right now. Can you guys tell me which would be can you guys tell me what are the themes of the future? Imagine the current year is 2035. What are the biggest themes of the future? What do you see around you? What all sectors of business are booming up? Okay, imagine it's 2035. What else sectors? AI, energy, tech, ESG. That's nice. ESG investing. That's nice. Semiconductors, solar energy, robotics, EV, healthcare, renewable energy is definitely renewable energy, logistics, IT, infra, biotechnology, pharmaceuticals, EVS, pharma, supercomputing, uh, AI, yes, EV, solar, entertainment. All right. So I think defense, yes. As you know, India is trying to cut out all their imports of defense and they're going to try to manufacture everything in India. That's a huge move. A lot of money coming in. India is also supporting infrastructure. Semiconductors, a lot of people have mentioned because the entire world is going to run on semiconductor, that's chips. All technologies of the future need semiconductor. Data centers, that's a good project. Green hydrogen, yes. Aerospace, a lot of people mentioned renewable energy also. As you know, by Paris, according to the Paris Act, by 2050, the carbon emission of all countries should be coming down to zero, which means everyone's investment is already going towards green energy. Wherever the investment follows, demand follows there and price goes up there. Okay. Pharma, insurance, construction, infra for sure. Yes. Defense, IT, space travel also is there. Nice. Even there's themes like, sustainable energy, like anything that if you notice, the government is spending anything for climate change, anything, all startups for climate change, or let's say wastewater management systems or waste management systems. All of these are themes of the future as well. Everything that is sustainable growth also has a big future there, right? So commodity, space travel, yes. Okay. Cybersecurity is for sure. Yes, exactly. Yeah. As the technologies, as it's actually increasing, cyber tech, it's high time that it's actually they actually catch up also. Railways, your PSU companies, all government institute companies, as you know, they only gave a breakout recently. Over the past 10, 15 years, they've been consolidating, not much returns. They just started trending in the past couple of months, right? Past couple of years. This trend is not a short-term trend. It's going to continue this trend for the next 5 to 10 years as well. There's nothing like such when such big consolidation comes out, it's going to continue that trend for quite a long time. Okay, so all of these are good stocks. Anyway, guys, so thanks for participating. Textiles also is a really good stuff. Garbage recycling factory, nice. Related to water conservation alternatives, yes, perfect. Crazy guys. I love how you guys are thinking. That's exactly how we should think, right? So all of these are different themes that can actually have a great impact in the future. Wherever money inflow is going to come in, what segments of business will attract investments or investors? All of these will actually come into the picture. Like a couple of things that you guys have mentioned: infrastructure, green energy, let's say sustainable energy projects, right? Like sustainability, let's call it that. Waterway sites, space travel, tourism, healthcare. As we know, we are on the verge of finding a cure for cancer. Like it's been trillions of dollars in cancer research spent over the past 20, 30 years. But the next 10 to 20 years, cancer research will also be out. So a lot of these things are likely to impact the markets pretty well. So the idea is simple. You have a lot of different themes. Now, if you ask me which of these themes will actually hit the profit targets you want, almost all of them will. Okay. All of these themes are actually things that will actually work out. You just have to figure out which stocks under this theme is actually good to go and what sectors under this. So the first thing I want you guys to understand is instead of thinking about where to make money, all of these things will make money. If that's the case, which are the things that you support as a person? Are you a person who wants to get into green energy, or like do you support renewable energy sources? Do you support waste management systems, right? If you, whatever causes that you believe in, you're supporting those companies. That's what investing is really about in its true essence. Like you believe that, okay, this company should become a big company because the cause is good, the vision of the company is good. That's where your investing mindset is. So you as a person, it's your corporate or it's your global citizen responsibility to make the world a better place. This is a small way to do it. Anyway, so we have different themes like green energy and all these things. Break that into different sectors. Under green energy, you have what? Solar, we have wind energy, we have tidal, biomass, hydrogen, all these different things are there. Just keep it as simple thing as this. The main thing I want you guys to do is under the stock section, right? So I want you guys to use, don't just like, first of all, we'll just Google top solar stocks in India or something, right? Don't buy any stock that you see online or on any blog, just like that. Okay. Instead, do something. What I want you guys to do is use trendline.com. Okay. Trendline.com is again a free tool. You can just come into this section. It's mainly used for both Indian markets and US markets. A really good tool for fundamentals. They do the fundamentals easily and give it to you in a simple, precise form. That's why I like trendline.com. So you can check, for example, when we looked at solar stocks, right? Let's have a look at, say, WebSol or Surana Solar or Inox Wind Energy. Let's type in Inox Wind Energy over here. Okay. Inox Wind Energy, this stock. Click on that. Now you will have three scores here. One is your durability score, valuation score, and your momentum score. Okay. So basically, trendline.com filters out all the fundamentals easily for you and this gives to you on a platter. So it has DVM scores, as we call it: durability, valuation, and momentum. D for durability. Durability stands for the financial strength. Does the company have a good bank balance? Is the revenue of the company increasing? Revenue increase, profit increase, their cash flows, everything comes under durability. If the durability is good, that means they may last over time. Right? Good bank balance is always required. Valuation, that is the stock undervalued or overvalued? Okay. Uh, this simply means that there are two types of like there is a market value for a stock and there is a book value for a stock. Book value is nothing but it's total assets minus liabilities. That's the definition. But in simple words, just think about it this way: a company has so much, it has a lot of land, it has a lot of equipments, manufacturing unit, a lot of product, inventory, raw materials. Add everything together, all its cash balances, all its investments, put everything together. That's the total value of the company, right? So there's a total value of a company based on that. So book value is the total market value of the company, and the market value is the share price. Okay, so according to the book value, it may be saying, say, rupees 100 per share. Every share is worth 100 rupees at least. But the stock market price may be, say, 50 rupees per share. Okay, so if the market value or the stock price, okay, if the stock price is less than book value, right, then we can say it's an undervalued company. Meaning, in the stock market, it's showing 50 rupees, but as per the real value, it should be at least 100 rupees. This is what we call as undervalued investing. Okay, we call this style of investing is what we call as value investing. It's basically what Warren Buffett and all these famous investors do. Idea is simple. If the stock price is currently 50 rupees, according to the books, it should at least be 100 rupees. In that scenario, this 50 will give it some time. Eventually, 50 rupees will go up and it will become 100 rupees over time. That's the belief. Like real value will be realized. That's what it says. So that's what undervalued investing is, right? Similarly, exact opposite can also happen where there are overvalued companies. Overvalued stocks are those where the stock price may be, say, 100 rupees per share. Okay, but the book value would be, say, 50 rupees per share. The exact opposite. That's what an overvalued company is. In simple words, if you see this valuation score as red, it's a bad company. Stay out of it. Okay. So valuation will always keep changing. When the stock price goes up and crashes, right? It's not the right company to buy at this moment of time. That's all it says. Over time, it may crash and the valuation may become green again. That's fine. You can invest at that point. But at the current minute, the stock is overvalued. Not a good stock to buy. That's what it says. Okay. So let's have a look at some other stocks also in solar sector. Let's say Urja Global, like this. Okay, now you can see here durability score is really good, valuation is still kind of overvalued. If you have all of these, either of these two as red, stay away from that stock for now. Either of these two are red, that means stay away from the stock for now. Fundamentals are not good at the moment. If either of these are orange also, it's still fine, but none of these should be red in color. That's our only condition for our next step. Okay, so let's look at Adani Power. Okay, you can see Adani Power mid-range performer, valuation is not so bad. You can still buy the stock, right? It's mid valuation, durability high, financial strength is really good. So you can do this also. Suzlon, I think it's parabolic. It's highly overvalued, requires a correction. That's the charts. Let's have a look at the fundamentals also. Suzlon Energy, it says the same thing. Its valuation is too high right now. Like it's still, there might be a question in your head, which is, a fundamentally bad stock, valuation might be bad, but the stock is already so high, right? it might go even further up. It definitely can. There's no problem with that. Like, we'll talk about that in the technical side of session actually. But yeah, generally fundamentals is a good way to screen out the bad stocks and focus on the good stocks only. But technicals is actually what is more important. So we'll get in the technical side now. Okay, so this is a fundamental screener. I mean, trendline.com. Any stock that you see, maybe HDFC Bank. Uh, you can see durability score of HDFC Bank is kind of bad right now, right? So it's basically telling you which stocks to avoid and which stocks you can actually buy. Okay. So if you look at Tata Power, as I remember, Tata Power, Tata Motors were all good buys. Yeah, Tata Power is mid-range performer. If you look at Tata Motors, I believe the rotation is happening for automobile industry. Automobile industry would be going bullish pretty soon. Yeah, you can see Tata Motors is a very strong performer, all green list and everything, right? So this is the first level. You can stop here also if you want. Okay, if you want to be a good value investor or a good fundamental investor, whichever company you buy, only buy stock which are going some giving signals like this. If that's the case, buy the stock. Simple. You can stop there also as active investing. But if you want to take one step further, okay, one step further where you can time the perfect entry and exits, that's where we get to the technical side of things. Okay, so this is value investing. We just talked about it. Yeah. Well, finally, there's also the momentum score. Forgot to mention that. Momentum score stands for is the stock trending upwards right now or not. This is not that important. Okay. It can be anything. It can be even red also. It's still not that important for us. We'll talk about momentum on the charts. That's what's more important for us. So the momentum score is also nice, but it's not that important. Okay. So this is fundamental analysis you can do in a very nutshell, very easy way. Finish it off with trendline.com itself. Filter out the best stocks across different industries, right? So if you want to scan by different industry also, just go to your sectors tab. Okay. Under the market section, you'll find sectors or industry. Like we can just go to this industry and test sectors dashboard. Whichever sector I want to check out. Okay, there's automobiles, healthcare, oil and gas, software. You can find this entire list over here. If I want to go into the cement and construction, just go into this particular tab. Okay. Now you can find which are the stocks in cement and construction as well. Okay. Usually it shows all the green and red here itself, but it's asking me to subscribe. The subscription is around 100 rupees or something per month. 100, I think 200 rupees per month. So whenever if you feel like sitting to do a lot of research, you can take the research at that point. Here, if you want to find the stocks which are having high DVM scores also, like these are some stocks in which you can create your own scores also. It's pretty cool. Like this will only show the stocks with high durability, valuation, and momentum. This is one way to filter out these stocks. Okay, so this is fundamental investing by using trendline.com. Cool. Now the main side of things. Now we can take one step further ahead and focus on technicals. So technicals basically defines your trade. Okay, this defines your entry, stop loss, etc. Stop loss, risk, all these things is defined by your technicals. So let's have a look at technical analysis. Before that, guys, still here, like quick energy check. One sec. If valuation score is high, means long-term option. Yeah, definitely. Quick energy check still here. All good. Let's move to the last part. All okay. Fired. All good. Yep. Okay. Nice. Yes, sir. Okay. Great, guys. Ready for technicals. DVM full form is durability, valuation, and momentum. That's what we're talking about. All right. Perfect, guys. Thanks for the quick energy check. Let's move forward then. Great. All right, guys. Lovely. Is there a time period in which we should do fundamentals analysis, like 1 day or 1 month? So every month, whichever stocks you have in your portfolio, just every month, just spend 1 hour for looking through the fundamentals. Like once a month, keep a check, like on whichever stock you want. That just usually I like I, every 1 month it won't have much of an impact or anything, but just have a, it's a healthy habit to have check every month. Every 3 months you should definitely have a check, every quarterly, but every 1 month just it's nice to have a check on all the stocks. Okay. All right. If you enter long-term entry, we need to enter swing trend line. Yes, that is correct. If you want to do some long-term investing, that's how you can do it. If you want to open your demat account, you need your PAN card, Aadhaar card, and your bank account ID. You can open across Zerodha, Upstocks, and all these other platforms. All right, guys, let's get back into the session then. For the last part, we will start. There's also a question: does expense ratio matter? Expense ratio is how much the mutual fund or how much the mutual fund or your ETFs charge for you to use that particular product. And it's usually around 0.3 to 0.3 ranges for index funds and everything. First of all, if you're going through mutual funds industries, stay away from thematic funds, stay away from sector focused funds and all these things. All of these won't work for long term because all of these things, everything is cyclical in nature. Every sector of business will have a boom up, it will definitely have a crash down also. That's how the markets really functions. So stay away from all these funds. Just stick into say one large cap. Even your flexi cap, all these things will be there. All of those, just avoid them. Okay. The easiest thing to do is 25% put it into Nifty 50 index fund. Okay, this is for large cap. This is for mutual fund investors who do not want to use direct stock investing. Okay, a 25% of your investment put into a mid cap fund. For this, you can use PGIM in their mid cap. Okay, mid cap fund or quant small cap fund is also there. You can use this, and then another 25% you can play around with quant small cap fund, small cap. Okay, the rest 25% you can play around with whichever type of funds you want. You can have either say US company stocks, US ETFs, or you can have say cryptos with you, or you can have some or anything like just this is your risk capital. Like have fun with this. That's up to you. But the rest of them can be a balanced portfolio. All right. So that's just a quick word on mutual funds as well. Let's get it. The recordings would be shared on Monday. Yes. Does expense ratio change by time to time? Not really. Once it's fixed, like once the asset this it's given, it's going to be the same. Why avoid flexi funds? So flexi funds usually have restrictions. All mutual funds are heavily restricted. I think you may have this question also. Like, first of all, yeah, this is the question that we usually get. That is, why should we go with direct stock investing? Aren't there mutual funds which can give me all the returns that I want? Like mutual funds are managed by professionally curated portfolios of professional managers and everything. Won't they be able to actually manage the fund better than I do? Okay, the answer is actually no, they can't, because mutual funds are heavily restricted. They can only opt for a couple of stocks. They cannot enter and exit like we can. Like for positional trading and all, they're not allowed to do so. The industry is heavily regulated to make it as risk-free as possible. So the returns are also actually much smaller than your direct investing. That's why. And flexi cap funds and everything, they have a minimum of 50% to large cap, right? That's one of the restrictions that they have. Ideally, most of your fund, large cap should just only be, say, 25% of your portfolio if you want to be a little aggressive. You can't have most of your thing in large cap. That's why instead of using flexi funds, just stick to one large cap, one mid cap, one small cap, and the rest you can just play around with anything. This is a simple way to scale up. And yes, the notepads would be given to you after the session. How does investing in a stock benefit that company? So you're investing in the benefit of if the stock prices rises for the company, that means the company shares are also valued more. So they can sell the shares to other investors to raise more funding for their future expansions. That's why. All right, guys. So we're done. I'm going to close the chat for a while. Let's focus on the last of the session now. Okay. So the last of the session, now we're going to focus on technicals. So we talked about the red and green candlesticks in a short, right? So we're going to have a small deep dive into each of these topics. Okay. So technical analysis, first we got to understand we're going to focus on something called as positional trading or momentum investing. Okay. And we're going to focus on trend-based trading strategies. Okay. So we're going to start a little slow with, say, understanding what is uptrend, downtrend, side trend, all these things, a little more in depth in perspective. Like when we're going to look at the market structures and identify the market trends properly. Okay. So let's start with this thing. So technical analysis, let's first take our charts. Okay, just a quick overview. You already saw the candlestick. You see a green candlestick and a red candlestick. It has four components. There is the open, low, high, and the close. Okay, to give you an understanding of what candlestick is, let's candlestick basically measures the time price movement. Let's take a chart like let's take some stocks that we like. Let's take a stock of that's Nifty 200. Okay. Let's take RBL Banker chart. Okay. Now, first thing you will notice is that this is what are different time frames. Every platform will have this. There are different time frames. If you put it the time frame as 5-minute time frame, okay, this that if you look at the candlestick, the first candlestick appeared at 9:15, the second one at 9:20, then 9:25, 9:30, 9:35, 9:40, 9:45. Every 5 minutes, one candlestick appears. If I look at a 30 minutes time frame, the same Friday's chart, okay, it became much smaller. This is Friday now. Friday first candlestick, second, third, fourth, fifth, sixth, seventh, etc. Every 30 minutes, one candlestick is appearing in this scenario. If I look at the same Friday's chart on a 1 hour time frame, it became even smaller. 9:15, 10:15, 11:15, etc. If I look at a 4 hour time frame, just two candlesticks, 9:15, 1:15, done. In other words, there's even a 1 day time frame. Full Friday, what happened to the stock price? That red candlestick. Thursday, and Wednesday, Tuesday, every day, what is happening to the stock price is being recorded by one candlestick. Okay. So just to summarize, a candlestick, this red candlestick simply means that buyers and sellers were fighting each other and sellers won. Sellers were more or sellers won on that 1 day's time. That's why it's a red candlestick. Okay. Candlestick simply measures price movement. How much a stock moved up or down in a day's time, or in that time frame we tell it to. That's what a candlestick is. So if we say the time frame is 5 minutes, okay, and if you see this candlestick over here, the last candlestick here, this means that in the last 5 minutes of this candlestick, buyers and sellers were at war, and sellers won. Sellers were more prominent, because of which price crashed and became a red candlestick. That's what candlestick means in short. Okay. So candlestick has four main components. One is okay. It has four major components in short. One is the opening price. Let's say the time is 9:15. Stock market just opened, or a new candlestick just opened. What is the price at that point? That's the open of the candlestick. Next 5 minutes, there are buyers pushing the price up, sellers pushing the price down. The lowest point till which sellers push the price down to, that's the low. Highest point till which buyers push the price up to, that's the high, right? And at the end of that 5 minutes of time, at 9:20, when 5 minutes are up, whatever that price at that point is what is called as the close of the candlestick. Okay. Open, low, high, and the close. These are the four components of a candlestick. Cool. Now, let's see how we can use this in action. So first thing we have to learn about is trends. There are three types of trends. Again, a little basic, but it's amazing how the simplest things can actually make quite a lot of money, right? All these, this trend following, right? This trend following simply means if the stock is uptrending, keep buying uptrending stocks. In simple words, this is what it is. If the stock is uptrending, keep buying uptrending stock. If the stock is downtrending, do not buy into downtrending stock. Okay. Again, there's a lot of technicalities behind it that we'll get into. But this is the form of investing that's done by most asset management companies across the world. And managing all of these are long-term stocks, by the way. Like if you are holding a stock for 2 years to 5 years of time, these are the kind of stock plays that you will do. Okay. This is personal trading. So pretty interesting style and pretty easy to execute also. And that's what we should be doing if you are an active participant in the stock market. So let's learn that. So first of all, when the price moves up from point A to point B, it doesn't just go up just like that. Okay. It doesn't shoot up suddenly like one single candlestick or anything. Like usually what happens is that price moves from A to B like this. It goes up, comes down, goes up, comes down, goes up, comes down, goes up, comes down, and finally reaches point B. It takes its own time. Okay. From point A to point B, it will take its own time, but it will finally reach there. So it forms, each of this is what we call as a swing. A swing. as in price is swinging upwards and downwards. It goes up meaning green continuous candlesticks to the upside. Okay. Then a set of red candlesticks comes in to the downside. Okay. That forms the low. So in other words, each of this is what is called as a swing, and each swing has a high to it. This is the swing high, swinged up, it formed a high. The red candlesticks together formed the swing low. Okay. Then again, green candlesticks came from here, right? And it formed the next swing highs and swing lows, right? So this is the general structure. Price moves in swings and it swings highs and swing lows. This is a swing high. This is a swing low. This is the next swing high. This is the next swing low. Next swing high. Next swing low. So if it forms higher highs, meaning if you compare this to the previous one, it's at a higher point. If you compare this at a higher previous one, it's at a higher point. Very straightforward, right? Higher highs and higher lows. This is what we need for an uptrending structure. This is what an uptrend means. Similarly, a downtrend also exists. Here is where the first one is the low, the second one is the high, the next one is a lower low. Compared to the previous one, it's at a lower low. This is a lower high. And compared to the previous one, it's a lower high. Okay. Lower highs and lower lows. This is the characteristics for a downtrend. That's how a downtrend is formed. Okay. So uptrend is when the prices go up. Downtrend is how the prices go down. Finally, one more thing is there, that is side trend, which is lows and all of these things are consolidated. Or if you can draw a box around it, okay. Sometimes on the chart, you'll find prices where it's doing like this, something. If you can just draw a box around the entire thing, that's a side trending market. Okay. Side trend is how basically it's taking a break. So when the markets move, right, first it might be doing a side trend, then it'll have an expansion to the uptrend. Then it may again go side trending for a while, then may have an expansion to the downtrend. Okay. So it's always a cycle of uptrends, downtrends, and side trends that forms the market structure. Now, how is this relevant to us and why do we actually care? Cool. So the easiest form of positional trading is where we will buy just this thing. Our entire entry is, I'll tell you the entry, but first, I'll tell you the rules and principles. The principle is we cut our losers short and hold our winners. Okay. That's what the principle behind the strategy is. Cut our losers short and hold on to our winners. We invest only in uptrending stocks. Only in confirmed uptrending stocks. That's the main keyword, confirmed uptrends. We'll learn what confirmed uptrends is. We invest only in confirmed uptrends. Never invest in downtrending or side trending stocks. Okay, this is the biggest downfall that people do. People have that mentality to invest in downtrending stocks, especially retail crowd. The problem is, like if you see a stock which was at 400 rupees earlier, price was 400 rupees earlier. Now the stock has crashed. It's at 100 rupees or something. Okay. So now you have that, your brain is going to tell you that it was at 400 earlier. So eventually over time, it will come back up to 400. This is one of the fallacies of our brain. This is not true. Don't fall for that. Okay. There is no market scenario that it should come back to 400. There's nothing like that. Right. So if you want to time that also, there are different conditions for it. So if a stock is downtrending, it will continue to downtrend. If a stock is doing a trend reversal change, right, we may have that feeling that it's probably a temporary change. It's going to come back up pretty soon. Nothing like that. It can be a long-term change also. It can drive down to minimum of 3 months. It can go to 6 months to 9 months to up to 2 years. Okay. These are the time cycles. I'll walk you through that. Anyway, so the idea is simple. If a stock is downtrending, we have that tendency to buy the dip. All of these, I want you guys to forget about them. Okay. Things like never average or buy the dip in downtrending markets. Okay. Here is a commonly done mistake, which is because of loss aversion. This is because our mind is tuned for loss aversion. Okay. Loss aversion meaning that when a stock that we bought, okay, it was doing pretty well at the start, always like that. And then it starts crashing. Okay. So now we'll get a minus 5% loss. Now our brain will tell that, okay, I don't want to accept this loss, so I'll keep holding. then it becomes a minus 10% loss. Now you don't like seeing minus 10% as a loss. So now you will put more money into the stock. Okay. You'll buy more of the stock so that your overall loss becomes say minus 5% or something. You'll put more money into it. You'll think about averaging down. Your idea would be you're going to average the position or buy the dip and all these things. But again, if you try to do that in a downtrending market, this is only going to get worse. Okay. Bad choice. This is how a lot of retailers lose money. These are the traps. Like loss aversion is something that our mind can't accept. Our mind cannot accept a loss. We cannot exit out of positions because it's a loss. That's one of the problems. Okay, so first of all, never try to average or buy the dip if the stock is downtrending. Okay, so downtrending structures will walk you through that. Another rule is that your max loss per stock should be 8%. Okay. Before this, there's also this is the risk criteria. Okay, risk criteria, there are three things. Criteria. Okay, first thing is like only invest up to 10% of capital per stock. Okay, so if you have 10,000 rupees, only invest 1,000 rupees per stock. Don't try to invest more, right? So this way, ideally, you would have 10 stocks with you minimum. All of them are positional trading. All of them are based on the strategy. So even then, right, even based on the strategy, also 2 or 3 of them will hit your stop loss. 2 to 3 of them will hit SL. Hit SL meaning stop loss. Stop loss is basically 8%. Let me just show you how to buy the stock also right away. That is, once to set your stop loss, I mentioned 8% drawdown or loss. That is, if you're entering any stock, like say Cummins India, like long term, every platform will have this option GTT, that is good till triggered stop loss. Just click on this option. Okay. Enter how much of a quantity you want. Make your stop loss minus 8%. Okay. If it's minus 8%, this means that the minute you enter, whenever you lose 8% in the loss, you will automatically exit your trade. This way you can automate it and you won't have your emotions involved. Just take an 8% loss one time and then it should be good. Okay. This is pretty much it. We'll talk about why 8%, like what is the reason, can I just hold it after a little bit more after that and all these things a little later. Let me finish off the strategy first. Okay, so risk criteria we'll get back. So the idea is simple. We invest only in uptrending confirmed uptrends. Now we have to define what is a confirmed uptrend. Okay, confirmed uptrends are where, let's see the chart structure. Okay. A confirmed uptrend is where you want this kind of a structure in place. Okay. Where let's say this is the first high and low. Then it forms a higher high, a higher low. And when it starts going above this higher high, this is what we call as a breakout point. Okay. Let's call that as a breakout. Okay. So when the price starts going above this high, let's call that as a breakout or beginning of an uptrend. From here on, the stock will have uptrending momentum. Okay, the stock will become in an uptrend. The stock will start going upwards. Now, what do you do here? So you have two entry points. Okay, your entry conditions. First of all, a confirmed uptrend will define this first. A confirmed uptrend is where we have higher high, higher low, higher high formation. Like 3 layers of that should be there. Only then it's a confirmed uptrend. Your entry condition is either you can buy the breakout or buy the dip. Second is buy the dip. Okay. So the buy the dip, averaging, all these things are investment options when it comes to uptrending market, not downtrending market. Okay. Buy the dip. So let's see. The idea is very simple. Let's go to the idea first, then we look at the stocks directly. So the idea is simple. Higher high, higher low, higher high. Okay. The minute it starts going above this, that's the breakout. You can buy at this point. That's one option. But let's say you miss that. In that case, let it form the next higher low. That's buying the dip. That's the dip. You can buy at that point also. Buy the dip over there. If you miss this entry point also, it's fine. Buy the breakout. Next breakout that you have, that's also an entry point for you. You can buy the next breakout. Or you can buy the next dip also. As long as the stock is in an uptrend, you can buy at every dip and every breakout as well. You can average your positions. People talk about averaging, right? You can average your position by buying more whenever the dip comes in, here is where you can buy the dip and average the position more and more. So this is how you invest during uptrends. When we look at the graphs, it will be much clearer. Now, the main scenario, like when do we exit though? Entry is very simple. When the breakouts comes, keep entering. All the high breakouts you can enter, all the higher lows also you can enter. Okay, we'll see that on the chart. But when do we have to downtrend, or when do we have to exit out of the stock? If a stock starts downtrending, we have to exit clearly. What is the definition of a downtrend? If it forms a lower high, okay, here also a 3-layer confirmation for your downtrend as well. Confirmed, let's call it a confirmed downtrend. A confirmed downtrend is where it needs to form a lower high, a lower low, and a lower high. If we have these three formations in place, then it's a confirmed downtrend. Okay, so the minute it stops forming lower highs, a lower low, and a lower high, that's a warning sign for us. We should start exiting the stock. This is the worst sign for us. Okay, here is where we should start exiting the stock. Usually, when this is confirmed, every stock will have a huge crash after this. Okay, a huge crash meaning up to say 50% crashes and 80% crashes. This happens at this time frame, like when this happens. Okay, so we'll see different examples for this to make you understand. Just a quick recap: lower high, lower low, lower high, lower low. This is what a downtrending stock would look like. If you want to know when to enter the stock, if it starts forming higher highs, a higher low, and a higher high, that's your best entry point. Okay, all of this is your best entry point. You need higher highs and higher lows. Let's look at the graphs directly so you'll have a better understanding now. Let's just analyze different company stocks. Which one do we start with? Okay, so for this positional trading, we'll be using the 1 week time frame. Now, time frames to use, we'll be using this on 1 week time frame mainly for position sizing, positional trading. 1 week time frame is for positionals. Okay, sometimes you can switch to positional trading 1 week or 1 day also. Sometimes you can use 1 day as well. Okay, if you are a swing trader who's a person who's doing this for say buying today and selling after 2 or 3 weeks of time, the same thing you can do on a 4 hours time frame or a 1 hour time frame. This is for swing trading. Okay, for intraday trading, this strategy is not recommended because this will actually flip its character in short period of time. So this is why this is not an intraday strategy. We'll be using you'll be using SMC in intraday. That'll be for tomorrow's session. This is 4 hours and 1 hour. Okay, for intraday, usually time frames are 30 minutes and 5 minutes, but that's not in our discussion for today. Okay, so anyway, we'll be using positional trading 1 week and 1 day time frame. So let's take any chart. Let's go to the 1 week time frame. Cool. This is on tradingview.com. Again, a free website. You guys can use it. On tradingview.com, one of the specialities of TradingView is there are some indicators you can put which are not available on your demat account platforms, right? We talked about swing highs and swing lows earlier, right? That is there in trading. Like normal indicators won't show you, but on TradingView, if you just type in swing high, swing low, you can find swing high, low, support, resistance by Pattern Smart. Just put in the script over here. Okay. When you do this, you will find a red arrow and a blue arrow on the charts. Okay, you can find these red arrows and blue arrows on the charts. This red arrow and blue arrows represent the swing highs and swing lows. This dark red swing high, the dark red means that is the recent swing high. All of these are your swing highs. There's a high, that's a high, that's a high. All of these are your swing lows. Okay, you can see your swing lows as well. So swing highs and swing lows are basically being formed on the chart. Okay, so let's have a look at how this trend change has been working for the past scenarios. Okay, first let's see when the stock started uptrending also, then we'll see the downtrend case as well. Okay, so this is the case from this side to this side. I'll just remove the swing high for now. Okay, just a quick walkthrough of the chart. Price went down, came up, price went down, came up. You can see the swings, right? It's like this. It's just swinging up and down.
Trading class
okay, that's what happened on the chart. So each of this is a swing high. That's a swing high. That's a swing high. This is a swing high. That's a swing high. All these things. And your swing lows are the bottom points. This is what it's saying. So now if you use the indicator, it'll just say the same thing. Okay. These blue lines are the swing lows. and the other one is a swing highs. Cool. I want you guys to notice from this point onwards, the stock has been downtrending. You can see lower high formation, lower low formation, lower high formations. It's a downtrending stock. Okay. The stock has been downtrending for a while, and because of the downtrend, it kept going down for a long time. Now, when can we say the stock is uptrending? Okay. This was the last high. Let me rewind the chart for you to get a better understanding. Like this is the situation that you will find a lot of stocks in right now also, where the stock would be something like this. If we want to buy into the stock, okay, we want it to form a higher high first. It forms a higher high. We need to form a higher low and one more higher high. That's your best entry point. Okay, this is what confirmed uptrends mean. Like right now, it formed a high and low, but you can see this was the previous high. It did not cross that or anything, nothing. So right now, it just forms a high and low. Now it has to form a higher high, 3-layer confirmation. Yeah, higher high, higher low, and higher high. That's what we're waiting for. So you would actually have patience and just wait for these stocks. Let the next set of things form. Okay, so you can see a higher high formation. That's a higher high formation. A higher low formation is also here. If it starts going about this, that's where we take buy the stock. Okay, we should have bought the stock there. Our entry point would be here. We would have entered the stock right there on that breakout. Okay, that's our breakout stock. We can buy there. Stop loss of -8%. If it goes -8% loss from here, then you can take your exits. Okay, and then just keep holding the trade. Right? Keep holding the trade till the trend changes. Okay, so that's expansions. It has actually started hitting our targets. Now, yeah, that's a trend change in action. You can see the lower high, lower low formations now. Yeah, lower high, lower low formations. Okay, so RBL Bank right now, what it did is it gave a good return. Okay, and then it started forming a lower high, lower low. Like this is the currently doing the lower low formation. It may have a small bounce back up also lower high. In other words, RBL Bank is in the close to forming. It's very close to forming a downtrending structure. Okay, let me just note this again. Okay, if this was the earlier high, now it formed a lower high. Okay, now it's going below the earlier low. That has already happened. Now it's lower low formation is happening right now. Okay, it'll definitely have a bounce back up also. Okay, if that bounce back up fails to cross this, if it's still a new lower high, then RBL Bank is doomed. It's going to keep crashing. It's going to be a confirmed downtrend. That's the case for a confirmed downtrend. Now there's nothing, but eventually, if it actually does not cross beyond this, then it will keep crashing for a long time. Okay, that's the analysis on that. So yeah, you can see a switch, how it's switching out to be a downtrend right now. Has not completed a downtrend, but it could be a downtrend pretty soon. Let's take more examples. Okay, so this is Endurance Techno Limited. Cool. Just one more example. Like you can see, this is the high, this is the low, earlier high. It formed a higher high, higher low, higher high. Here is where you can buy the stock. Okay, now you have the option. Uptrending started in 2024. Now here's a key information. Okay, here's a key information. One sec. Right. So as I was saying, the uptrend just started here. Note this. It found a higher high, higher low, a higher high. It started in October 1st. 2024 first week. Okay. Now here's an important part about time cycles. That is, there's usually a duration of time in which uptrend tends to continue. If a stock starts uptrending, like what we are doing right now, the higher high, higher low, higher high, higher low, higher high. The main use of this is to understand the starting point of the uptrend. Okay. This is useful for identifying our time cycle for the uptrend. Simply put, easiest way to understand is if an uptrend starts for the next 6 months of time, it will continue to uptrend. Holding period is minimum 6 months or 9 months of If it exceeds the 6 months limit, then for the next 2 years of time, it will continue to uptrend. If it uptrends beyond 2 years, it will continue uptrending till 5 years. If it uptrends beyond 5 years, it can continue uptrend towards 10 years, which is much rarer. These 5 years and 10 years are pretty rare cases, but on average, most stocks, minimum, it will uptrend for around 6 months of time. But usually 2 years of time is the general holding period. 2 years to 5 years is what the usual holding period is for positional trading. If a stock is in an uptrend, buy the stock until the trend reverses. You don't have to exit until it forms a lower high, lower low like this. Until then, you don't have to exit the stock. Instead, you can even buy more every time it dips. For every dip, you can buy more. Every time it breaks, also, you can buy more of that stock. Okay. And the perfect thing is in this stock, this is Endurance Techno Limited, right? You can see here uptrending started 2024. You could have bought when the price came back to this point. You can buy more at this point of time. And right now also, it gave a breakout over here. You could have bought here as well. Okay. Now you should wait for it to form. If you want to enter now, you can't enter right now. You have to wait for it to form a swing low. There you can enter. Or if it goes beyond there also, you can enter more. You can either buy the break or buy the uptrend. So here, this has been uptrending for close to January till July. Yeah, it's just completed 6 months of time, right? 6 months of time just got completed. So it is in a make or break stock. If it starts falling from here, starts going downtrend, then the stock won't uptrend anymore. But if it starts uptrending again, it has the potential to uptrend for the next 2 years of time. Keep buying the stock, right? So that is one way to look at it. Similarly, downtrending also has different cycles. Okay, for downtrending, the cycle is usually if a downtrend starts, it can last for a minimum of 3 months of time or up to 9 months of time. Then the time cycles are of 2 years. If it downtrends after that, it can downtrend up to 5 years, okay, which are rarer in nature. Okay, so let me take one more example, then I'll open the chat for you guys. One sec. Okay, so this is Dabur India. Okay, check out Dabur. Dabur's current condition is like it's been side trending and everything, but generally a downtrend or a side trend formation. Okay, like generally a downward direction. It did a higher high formation and all these things. Okay, but we should not, like, people may jump up because Dabur gave big returns in a short period amount of time. Don't fall for that. Okay, it just formed a higher high. There's nothing new. Let it form a higher low. Let it form the next higher high. Then you take patiently in Dabur. Till then, just keep waiting. To wait and everything, right? Just keep you can use these options like add alert option. Like add alert on Dabur at 653 rupees. So you will get alerted when your stocks analysis is actually giving the returns. Till then, you just have to keep waiting. Okay. Okay, so this is Dabur. Now I'm just going to open the chat box. We'll take some. Yeah, can you guys suggest some good stocks to analyze? We'll analyze that together and keep learning the same concept again. Suzlon, I see a lot of Suzlon. Whoa, everyone wants Suzlon. Okay. Yikes. I knew this was happening. Okay, this is, we need to find an entry point on Suzlon. Okay, I'm just gonna turn on the chat for a while. We'll take the stocks. Okay, so let's start with Suzlon. If you look at the uptrending conditions, okay. So this stock also, notice where it started uptrending. Okay, Suzlon started uptrending here. These were the earlier highs. It formed a higher high. It formed a higher low. It formed the next higher high. Uptrend started from there. And coincidentally, see how everyone's money started rolling in. From exactly that point onwards, the stock just has been rallying up. Okay, this is the power of a proper confirmed uptrend. So these kind of stocks are very hard to get into right now. Entry points are going to be hard, but let's see what we can do right now. Suzlon already gave. Yeah, it's time for a correction. It's already up 551%. So remember the rule of 80-50. Any stock that has moved up well will definitely have a crash. Okay, the bear market has not arrived yet, so it's still not here. If you're looking for entry points on Suslon, hmm, this is going to be hard. Like fundamentally, as you guys saw earlier, Suslon's valuation is pretty bad because of the same reason. It's it has hit all its target actually. There's not much of any targets left for it. Uh, yeah, I would not be comfortable taking an entry on the stock right now. Like it's too overvalued. Like if we can find something where like it may have one last momentum push above 85. Okay, this is the last thing that can happen. Above 85, there could be one more set of momentum push. But right after that, I would look at an exit also from there. Like I can't hold the stock for too long. Like it's too inclined. Okay, like there is definitely going to be a correction coming on correction coming on Suzlon. If it starts crossing above one last push up, just buy that momentum as the last resort. But you will have to make exit immediately itself. Just capture those returns and exit. Because Suzlon looks like very overvalued right now. Like these kind of returns cannot be sustained over time. Okay. Let me look at some other stocks. Infosys, nice. I think a lot of the IT company stocks are actually looking to turn their tide. Uh, let's have a look at Infosys. Yeah, nice, good stock. Good catch actually. In fact, very good catch because you can see Infosys. It just started making proper higher high, higher low, and the next higher high. Uptrending, a proper uptrend, full on uptrend just started coming in. Okay. That's the sign of an uptrend. So this means that it's gonna have a comfortable ride up until at least the next 6 months of time. Okay. So Infosys definitely bullish in nature, definitely a buy zone, and you can buy the stock right now also if you want. Keep a -8% stop loss and have a run on Infosys. Good stock. Okay, let me check the charts. Next, IRFC. IRFC, IRCTC. A lot of the railway companies had a good healthy correction. Let's see how much what it's doing right now. Okay, this is the railway sector stock. I'm looking at the 1 week time frame. You can see higher highs, higher lows, and everything. If you see from where it started out, check out this coincidence, no? Like, check this out. Where higher high formation happened, higher low formation happened. Only when this higher high gave a breakout, this big movement came in, right? So this is why a lot of the hedge funds out there, everyone just follows this simple three confirmation rule. If they get the structure, that's when the biggest amount of money starts flowing in the market. Okay. That's what drives up the market like this. That's what we want. Anyway, a little too late in this party right now. Uh, this stock, it's in a demand. It's in a very tight zone, to be honest. Like if it starts going below this, it's going to be bad for the stock. Hmm. Okay. The only thing is if we can push further up like this, then we can see an uptrending structure. But right now, no trade zone on IRFC. We can't initiate any new positions. If you're already in IRFC, uh, from a long-term perspective, if you look at the time zone, right, it started uptrending back in 2023 of July or August. Okay. It's already been past 6 months. It has 2 years of time left. This is not the end of its uptrend. You can comfortably hold till 2025 also. Okay, so uptrend is still not done. Till 25 mid or something itself, there will be more returns coming in. So if you're a long-term investor, you can keep holding the stock itself. Uh, okay, next stock. They said IRCTC. Interesting. IRCTC is slowly doing a small reversal tech. Yeah. IRCTC is currently downtrending. We cannot initiate any new positions. Why am I saying it's downtrending? Lower highs and lower lows. Okay. IRCTC is currently going through a downtrending phase on 1 day time frame. Uh, it may turn out like it's still overall, it's still an uptrend. Okay. In short period of time, it is downtrending. But if you want to buy into the stock, what we need is Okay, I'll repeat this case for IRCTC over here. What we're talking about here is this is a stock which has already given a higher high formation, a higher low formation, and started giving a breakout also. Okay, this is where in one of the boot camps itself we timed this. We got this move up. Okay, it already had a higher low. Again, points for us to enter more. Gave a higher high as well. Again, in that higher low zone. It is slowly forming higher lows in the smaller time frames, in 1 day time frame and all. So in a shorter period of time, it is having a small downturn, lower high, lower low formation. Okay, but if you wanted to enter now, if you want the right entry right now, okay, if you want the right entry right now, what we can do is we can wait for an uptrending structure on this 1 day time frame. Meaning, let it just give a high up. Okay, let it just give one high. Let's just make a higher high, higher low. Most likely, once it crosses this 1050 rupees price, okay, at that point the stock will get back its bullishness and will start flying again. Okay, so if you want to take new positions above 1050 would be the right point. Okay, a lot more questions have come in. Let me just, okay, I'm just going to open the chat one more time, guys. If you guys know any unique stocks, something not common, something, quite interesting or something, just let's have a look at that in the chat box. Jaiprakash Power is definitely something that's good. It's already, so Jaiprakash Power, let me just show you this. Okay. It's kind of like in a side trending zone right now, not much happening. It's a range consolidation. But this particular stock, okay, it has a lot of potential ahead. If you look at the stock screener for this also, this is Jaiprakash Power. Okay, it's a strong performer under radar. Like, it's not signed in. Perfect. Yeah, you can see it's a strong performer and it's under radar, which is pretty cool. Durability score is high, valuation score is pretty high. Pretty high. There's someone mentioned CG Power. That's also really good, right? Semiconductors and everything. You can check out CG Power Industrial Solution. Valuation is a little bad right now, but let's have a look at the company stock also. This is CG Power. Okay, for CG Power, yikes. This is one of those 5 year stock cycles that we talked about. Remember? So 2 years clearly it's been uptrending, and it's been uptrending since. Imagine the people who got it at this price. It was a penny stock at 10 rupees. uh, yeah, it's been uptrending since here actually, from around 2021. Let's keep it on the safer side. February of 2021 started uptrending. Okay, so it's clearly going for a 5 year cycle. So it should have time till 2025 or 2026 also for it to finish its cycle. Interesting stock, but right now it formed a lower high. That's a small warning sign. Doesn't mean anything. It needs to do a lower low, then lower high. Only then it's a downtrending stock. Otherwise, maybe what can happen is like it just cuts through all of these things easily. So it's still an uptrending stock, still a good buy itself. Above 800 rupees would be buying the breakout, or you can buy on these dips as well. That is right now. Both of them seems decent enough. Okay, fundamental valuation of the company seems kind of off, but technicals wise, it's still a good stock. Okay, let me see other questions. Campus activewear. If the trend moves to side trend from an uptrend, should you hold or exit? Hold. If you are in an uptrending stock already, and if it's doing a side trending or something, keep holding the stock. Okay, you don't have to exit. Like, just keep holding the stock. Tiger Logistics, prudent. Good stock, just gave a breakout. You can actually buy the stock. Let's have a look at this on a weekly time frame. On a weekly time frame, it's been extended already. Yikes. Yeah, on a daily time frame, it looks like it just gave a breakout and it's doing a retest. You can go for the stock. Okay. Yeah, uptrending stock seems decent enough. Shipstone. Here is another interesting stock. Shriram. Okay. This looks like a stock which has been uptrending since September of 2022. Looks like it's in its last stages of its uptrend also in that case. Like 2 year cycle is just about to be done. I don't think we can hold the stock for a long time. One thing, it's already downtrending. It tried making trend change, but not happen yet. Um, yeah, if it needs a higher high, higher low structure like this for it to work, but it's towards the end of its 5 year cycle. I mean, 2 year cycle as well. So I would not recommend the stock. Okay, Solar Industries. How to set targets and everything. For this, we're not, this is more like a buy and hold strategy until the trend reverses. This particular strategy does not have fixed targets. If you want to have targets, you can exit between say 10, 15% and 25% returns. But that's for swings usually, not recommended. Okay, Solar Industries. This is kind of tight. Higher highs, higher lows. Yes. It's in a demand zone. If it starts pushing up from here, this will show this as a dip indicator. In that case, you can buy more. But yeah, it looks decent. Let's have a look at trendline.com also. I forgot to mention these checks. Always, whichever stocks you check out, just have a check on this as well. Okay. Solar Industries. You can see it's an expensive valuation is kind of high also. That's usually a red flag. I would recommend you guys go for stocks which are both good in both the segments. Hindustan Zinc, I remember reading recently that it's pretty cool right now. Let's have a look. Hindustan Zinc. Valuation is bad. Azad Engineering. Let's have a look at Azad Engineering. I'm gonna find some stocks that you guys have mentioned, which is good fundamentally as well. Action Constructions. Expensive. Okay. A lot of questions coming in. 1 second, guys. JK Tires. Yeah, JK Tires and Orient Paper is also good. Let's have a look at JK Tires first. Okay. So this is JK Tires fundamentally good under radar stock. Yeah. And let's have a look at the fundamental technicals as well. JK Tires. Okay. On a weekly time frame, it did form a lower low formation, lower high formation. Okay, this is the current situation on JK Tires. General overview. Let's have a look from where the uptrend started. It started uptrending around July of 2023. Okay, and it's clearly been almost after 6 months of time itself is when the downtrend also kind of started. Like after February, March, the 6 month cycle when it was getting over, that's when this downtrend cycle, lower high, lower low formation also happened around the same time. You can see the February. That's a 6 month cycle in action. But now it's trying again for its next uptrend. It formed a higher high initially, okay, but then a higher low, but then it formed a lower high. Okay, so when this happens, you gotta reset it. As in, now your expectation is it goes up, it formed a higher low. If it finally starts going above this high at 520 above, only then JK Tires would be the perfect entry point. Okay. Fundamentally, the stock is really good. There's nothing wrong with it. But currently, it's experiencing a short term downtrend. That's because the 2 year cycle is out. Now, if it starts going above this, if it just gets that, if it picks up that pace and goes above 520, then it's going to start its 5 year cycle, the 2 year cycle. Sorry, that's a big, but that's usually a bigger movement. That's what we want to get. Okay. Can you check Trent? Okay, I'll have a check on Trent. I think Trent, I just recently analyzed it. Tiger Logistics, Electroplast, Exide, IEX. Okay. I'll try to do as many as I can, guys. Let's do it. This is trend. Yeah, trend is already uptrending. Think we already missed the entry. The stock is certainly uptrending. We already missed the correct entry point. You'll have to wait for it to come back down now. Let it over retest. It'll probably come here, make the next swing low. Let that happen. Like, don't. I know you'll have that fear that it's gonna have a big boom up like this. That's fear of missing out. Okay, just wait for a little bit. Market will patiently come back. At that point, take your entry. Okay, and Tiger Electric Electroplast. Tiger Logistics and Electroplast. Let's look at this. Oh, nice talk. It's just reversing its trend right now. Let's have a long-term vision also. Okay, it's been a downtrending stock for quite some time. Let's have a look at the trend line as well. This is Tiger Logistics. Durability is decent, borderline. Valuation is this borderline. Decent stock. Hmm. It's awaiting turnaround. Yeah. Like it's trying to do a trend change. It's gonna take some more time, but if it does this, then we can start entering the stock. Okay. Not a bad stock. Definitely has room for it to grow. Um, we'll see that. Exide. Okay, let's take a look at Exide. Okay, Exide is currently in a downtrend for the daily time frame, which means a short-term downtrend is happening. No entry as of now. Okay, downtrend because lower high, lower low, lower high. So this downtrend may continue for a few months of time also. And whenever it starts reversing, only then we can take an entry on Exide. Till then, you'll have to keep. You can't take an entry. Okay. All right. Let me. Someone mentioned Wipro. Any crypto? I'll give you the crypto full list actually. Like a lot of couple of these cryptos are really good to buy right now. I'll give you that list on the chat right now. Let me just do Tata Power also. Then we'll switch to that. Tata Power looks it's range bound. Okay, like usually after range bound session there could be big movements, but this will take its time. Okay, this will take its time. It's side trending right now, but overall I think yeah, on a weekly also it's an uptrending stock. It'll take its own time though. Whenever it actually comes out of this big base, let it starts crossing over this all-time high above 480. If it crosses, that will be a good time to buy it. Okay. But yeah, it's going to be a lot of patience when it comes to Tata Power. How to exit a stock? How to exit a stock? That is, keep holding. For these are personal trading strategies, right? You'll be holding it for 2 years or even more until the trend reversal changes. If the trend finally does this formation, okay, like does a lower high, lower low, lower high formation, this is when we exit the stock. Till then, you can keep holding the stock. Okay, that's the his just for that. What about Gold Bees ETF? That's for following gold. Better than ETF, I would say SGB bonds definitely gives a better edge over that. Okay. Okay, there's a lot of questions. Let me just see what to do. Uh, what time limit should we set the chart to see on the 1 week time frame? Okay, we're going to be using the 1 week time frame for all our analysis, and 1 day time frame is where we take our trades. Tata Steel, Zomato. Zomato has already been uptrending stock. You can continue to hold the stock also. Like, see, the stock has been uptrending since there. If you look at the daily time frame, you can see since when it started uptrending, proper higher high, higher low structures, just following the proper price action. If you want to get another entry on Zomato, buy about 280. That's going to be the next entry. Or let it form a swing low also, either buy there as well. A good stock to buy, no problem. Okay. Which is the best platform for investing in crypto? For Indians, you can use this platform called KuCoin. That would be better for Crypto. Okay. For crypto, you can use KuCoin. Okay, KuCoin is one of the legally compliant exchanges in India. KuCoin is there, Delta Exchange is there. These are the recommended ones. I would say KuCoin would be better than Delta Exchange because KuCoin is more international nature. Okay, okay, I'm going to take last two stocks, then we'll move on to the other type. But swing low forms after the stock touches the point and moves up, right? Yeah. So if you're saying this indicator over here, okay, this swing low formation, usually the indicator picks it up only after the price moves a little bit upwards. That's also fine. You can enter there as well. That's no problem. If you want to know if it's a real swing low or not, that price movement should actually come in. Like otherwise, we can't say when is the exact swing low. So it might be a little above the swing low when you buy the dip, but that's fine. Okay. All right, guys. So Binance also you guys can use, no problem. So there are two stocks here that we'll look at. I'm going to use two more stocks, then we will head towards the closing. One sec. SBI. Okay, let's do XBI as well. Let's do. Okay, let's see Vardhman Textiles. Okay, so this stock is downtrending from the top on a daily time frame. Weekly time frame, it had healthy uptrending movement from 2023 onwards. It does definitely has potential to the upside. Okay, so stocks whenever they do these kind of reversals, right, these kind of recoveries, this much gap, there's a simple way to actually predict this. This much gap will definitely have a this much expansion as well, but this will take its own time. Like let a green candlestick come here above 520. That's where the next swing low would be formed. At that price point, you can buy it. If 520 would be the good price point. Generally, I think this stock has been good. It's been on my radar for a while. Let me just check the fundamentals right now. Yep, strong performer. You can buy this stock over. Vardhaman seems like a good stock investment. Gujarat Gas. Okay. Okay, this one slightly hit the target and just came back down. It's playing between these levels itself. We've analyzed this before. Okay, it seems like good. This is also good stock. As you can see on the weekly also, it is forming, it is in that breakout zone itself. Maybe it will form a swing low pretty soon and then start going up. So this would be on my recommend list as well. Like in the short term, it may be a little downtrending. We need to wait for it to just go a little bit above this. Above 620 would be the right price point. Okay. Buy above 620. That's a good price to buy Gujarat Gas. Okay. Please do SBI. Let's do these two and then we'll move forward. State Bank of India. SBI, higher high, higher low, higher high. 2024, it started uptrending around March, I guess. Around February, 6 months after that is like October, July. Oh, good time. Like again, State Bank of India is also it's in a zone where either it reverses from here or it starts going up from here. If it goes up, it can continue for the next 2 years of time. If it reverses, then it'll have to start fresh again with a new time cycle. So that's SBI India. If you want to, let's see if we can take any entries right now or not. It's in a small breakout range right now. That's good. Yeah, it's in it's range bound. Generally, it formed a lower high and lower low. Okay, so it's simple. That is, if it doesn't cross above 900 next, then the stock may crash. We don't have enough information to say if we can buy or not. Ideally, what we can expect is it may have a, if it goes above this, may have a price movement till here. but we needed to cross this as well for HDF State Bank of India to give big returns for the next couple of years. So it'll take some time. Again, only time will tell on this. Last one, guys. You are doing ONGC. Then I'll give you the crypto portfolio, and then we can slowly wind down the session. Okay, this is your weekly time frame. ONGC long term, higher highs, higher lows. It's been uptrending since July of last year. 1 year up. It still has a long bit. It still has one more year to go. Technically, it's a 2 year cycle. So still looks good. We can buy ONGC above these highs. Once it goes above this, buy the break. You can buy the break here, or if it starts making one more dip, we can buy there also. But I think the break will be coming in pretty soon. Okay, so you can have this on your watch list. About 336, you can have ONGC. Add alert. Done. Cool. Awesome, guys. Right. So just a quick walkthrough. This is what your yeah, I'll give you these notes in the session also. Let me just quickly give you the crypto notes as well. Okay. So going forward, what I want you guys to do is start with a capital of around 3,000 rupees or 5,000 rupees. Just start there, especially the beginners. Start with intraday trading itself. For long-term trends, I just want you guys to make small cases. Small case is nothing but you guys can check out small case, again, a free website initiated by Zerodha itself. Okay. So you can make a small case where,
Anna,
1 second.
అంటే ఇప్పుడు నాకు 10
So
నిమిషాలు
now,
వెళ్ళిపోద్ది.
now it's time for you to develop confidence, right? You need to be confident about what your trade setup and everything looks like and the returns comes like. So go to this create option. Okay. You'll find the option to create a small case. Create a small case and add a segment, or add segments like, or this is like, say, uh, power generation sector or something, right? And put companies like JP Power or something like this in this, and have a small case that is built like CG Power, or let's put Adani Power, right? Like build out whatever small case that you want with the strategies that we just talked about for long term investing, and then just click save on the small case. Give it a name, trial.
సరే సరే
Okay. So now the small case will basically start tracking the performance. Okay. And you will see how much returns that'll actually make. Right. So this kind of methodology is actually kind of something that works pretty easily itself. Like these are all small cases as from October and all these things. You can see this around 321, 428, 202, 280. None of the things that what I do is simple. Trend line should be fundamentally solid. And let's say this uptrending structure should also be fundamentally good. Then these are the kind of returns that you can make on these themes, right? Pretty cool things. And at the same time, some of these YouTubers and everything gave around 12% all these things. But yeah, it's 16, 33 and everything. Anyway, so this is what I just wanted you guys to learn for this today's session. This is about long-term investing and creating your wealth side of your portfolio. Tomorrow's session, you guys will be focused on intraday trading. There's something called as smart money concepts or smart money trading. It dives deeper into in-depth chart reading. It might be a little this is more of a high accurate strategy. Rather than focusing on taking so many trades with lower accuracy, focus on taking one single trade with high accuracy setup. That's what tomorrow's session is all about. That's going to be hosted by Ritvik. That's going to be a pretty interesting session. Do join in for that. So yeah, my expectation from you guys is just start creating a small cases, start tracking stocks so that you guys can be more confident with it, and then over time you guys can start deploying bigger capitals into it as well. For intraday and everything, start with a small capital of 3,000 to 5,000 rupees and start trading on that, and give it at least 3 to 6 months time. Don't focus on the money first, focus on the skill. Money will eventually follow. Be a funded trader. You can take as much capital as you want in funding. There's no issue with that. Just focus on your skill. Your money will eventually follow, right? So let me just give you the crypto portfolio as well. This is our Discord channel as well. Right. So you guys will be getting access to the Discord public section of the Discord, right? So this is the public channel. So Discord is where we usually trade together with all our mentors and mentees. So in this, for you guys, there'll be trade breakdowns, trade education, all these things over here. Like check out this Haven Academy section also, where you want to learn about risk management or liquidity and all these things. We basically break it down into simple terms, and pretty cool concepts over here. So just do come in and check out these concepts over here, right? So we'll be posting a lot of trade ideas and everything on this itself in the public channel sections. That's your access of the thing. Generally, we are a trading company which is specialized in both education and the trading desk. So we are the only ones in India who actually train traders and give capital for trading as well. So we are basically we're basically a set of our mentors team is around 7 mentors team working together for all different types of markets. Like whenever we take our entries, also we update in the market channel itself. Maybe swing ideas, maybe intraday, maybe forex, maybe crypto. We basically trade together with the live members as well. This is just the section where people want to copy our trades. Um, the entire community is pretty chill. We just have PNL section, long-term portfolios. This is where you need the crypto. One sec. Yeah. So here's the crypto portfolio. I'll just put it in. So we have made a low risk one as well as a high risk one, medium risk one. So if you want to put in, say, 10,000, put 2,500 into Bitcoin, 2,500 into Ethereum. This is for low risk portfolio. A medium risk would be a lot of alternate altcoins which are less known, but could give good returns, right? So this is the thing generally. And yeah, in the Discord server for everything, we have for equity market, we have a different Discord. Like we have different voice channels basically. Like we live trade with all our members, we share our screens, we trade with them every single day. And we trade across options, we trade across equity market, forex market, and even US markets. So it's all in one. Even for swing traders, we have a separate section for that. So that's what we are as a community. So we are in simple words, we basically train traders from scratch, live trade with them, give them money for trading as well. And what we offer is usually a membership program. It's mainly where membership has this masterclass where we have classes for 3 months of time every weekends. That's one part of it. You can reschedule to be a new classes any point of time. And we basically our whole idea of Haven Arc is that we want to take care of our members completely. Like maybe your financials, maybe your even for your children's education and everything, the general financial planning where you invest into mutual funds, everything is basically by us. We also have our automated algo trading platform where we trade on your behalf so that you have a passive income as well. That's what our membership is. So that's pretty much all that we do. Like our whole objective is to be a hedge fund. Like we are trying to make there's a lot of regulations in place, but we are making that happen. So we are trying to be a hedge fund and developing our strategies into that. So this is basically our different verticals that comes into the picture, right? So yeah, guys, that was pretty much it for my webinar. If you guys don't mind, can I get a quick review? I'll just open the chat for a while. I just need a quick review about how the session was for Instagram, actually. Like, could you guys just give a drop review about how the session was?
$500 కట్టాలంటే ముందు $50 వేసుకోవాలి. $50 వచ్చేసి
Camera.
అంటే $5 ఛార్జెస్ పడుతుంది. $500 వచ్చి 35
Okay. Awesome, excellent.
20,000 పెట్టుకుంటే
Very informative. Awesome. You're the best mentor. Thanks, man. Excellent webinar. I learned a lot of super amazing. Super. Thank you. Discord best talk section ever attended. Thank you. Mind blowing. 11 out of 10. Worth the uh, good knowledge. Boom boom. A to Z everything. 10 out of 10 everything. Very informative. Okay. Share the notes. Mind blowing. Oh, crystal clear understanding. Great. Thanks, guys. Very happy to hear all this. Okay. Okay. 11 by 10. Boom. Thanks, guys. Thank you, me. Okay. Best session. You're the best, man. Thanks, G. Thanks. All right. Thanks, guys. Thank you for all the lovely reviews. Value for money, crisp. Okay. Okay. All right. Thanks, guys. Thank you for all the lovely comments. And yes, the job for Discord, we'll be sending the links out on Wednesday. I think, yeah, Wednesday. I think we'll be having different programs also along the way. We'll have more sessions on trading psychology, Fibonacci series, and all these other webinars taken by different mentors also. That's part of your webinar pass access. Like discount is basically, sorry, the bootcamp is basically the first Tuesday sessions to make sure that you have the right investment knowledge and the trading knowledge. And over time, it takes a lot of practice. That is, for me, my expectation for you guys is just use 3,000 rupees or 5,000 rupees, plain normal equity market itself. Don't don't have to jump into derivatives for the quick cash, quick returns, and everything. I would say go for a funded trader approach. Make sure that you know how to manage your risk properly. Learn at least one or two trading setup. Keep repeating that. Once you master that, be a funded trader with us or with anyone that you want, and that's your career for a trader. Like even as a part-time income, especially for the working professionals out here. I know that work is gets gonna get training and we have a routine and everything. But before sleeping, just make it a small hobby. Like before sleeping 1 hour, you can trade in the forex market or the crypto market. And once you see that small money coming into the account, no, like if you're just trading even with $100 and you make some $10, like that it's very attractive that making money from nothing. That's the power of trading. So that's pretty cool. So once you get hooked onto that, then you will see yourself getting immersed into it and you will start loving the process. That's going to be crazy. So do that. Yeah, as I mentioned, Discord link would be shared later. Recordings would be given on Monday. Notes will also be given on Monday. Tomorrow will be focused on SMC trading. That's where we'll be learning about order blocks, liquidity, imbalances, break of structure, change of character, and all these things. It's again going to be a little extensive session. That's going to be done by Ritvik. What kind of stocks should we analyze for positional trading? Can we apply for penny stocks as well, once under 50 rupees maybe? Good question. For penny stocks, make sure they are fundamentally good in trendline.com. If they are, and if it does give positional trading, go for it. That's a really good penny stock expansions. Please hold one clause on how to use TradingView properly. Yeah, can be arranged. We can do that as part of the webinar pass. Okay. How to join community Discord? Yeah, if you're talking about the paid programs, that's a little different. We'll be sending out the forms for our lifetime membership. Again, our lifetime membership is where we take care of your financials for life, maybe your investing journey or your trading journey. As a trading journey, we make sure that you become a funded trader through our get funded modules, and we give you funding for trading. We want you in our trade desk. That's the idea. But at the same time, we make sure that your investments are also covered, and your maybe your insurance or maybe your children's marriage planning, how much to invest right from today. All that is done in the algo trading. All of that is basically part of the membership features. Okay. Platform for forex exchange. Okay. What's the duration of the webinar series? The webinar series, the main sessions are these first two sessions, and at times we organize, say, once a month or twice a month, some extra sessions for beginners and all these things like trading psychology. Those are usually 1 hour and 1.5 hour sessions. Short ones just for quick knowledge. Okay. How to get lifetime access? So will be the membership amount and all these things. So we usually have a slot based system. Like the first 10% to come in usually gets it at 25,000. The rest 10 will be getting at 30,000. The rest at 35,000. The normal price is around 40, but webinar discounts included usually comes between 30 to 40. Would like to learn more than these two sessions? Any chance? We'll organize a lot of these other webinars, like 1 hour, 1.5 webinars also by different mentors as part of this thing itself. We'll be updating you on the group itself once we start that. Okay, cool. For how much time period? If you're talking about a membership, it's all lifetime. Like it's just one-time purchase and everything else is done for lifetime. So we don't upsell anything also inside. It's just one single thing and we take care of you. Pathway to become funded trader, I would say for the first 6 months of time, just focus on mastering 2 trade setups, 2 to 3 trading setups, which you really like and comfortable with. Replicate your results every month. Track your results. Just try to achieve around 8 to 8% returns every month. Try to reach this target consistently. Okay. Um, this is just in the equity market itself. That is, if you're on a capital of say 10,000 rupees, just make 800 rupees in a month's time. That's your objective. Do that, replicate it multiple times, and then you can write the funding exam and basically get funded. Okay. Will you guys share how to get a trade setup? Yeah. I mean, tomorrow's is also a trade setup. Today's was also a simple trade setup. Tomorrow's is also a preset setup. Let you say something about the course full details. The course full details is basically 4 levels of programs. One is price action, smart money, then forex and advanced forex. The main thing is the last module is get funded module, as we call it. Like, this is where we help you cheat your funding exam. Okay. Like, in funding exams, usually you have a simulator and you trade on that simulator, right? So during your simulator exam period, we basically live trade along with you. We tell you which all trades to take and everything. We make sure that you get funded also. But at the same time, obviously, learning is also part of the module. So that's why it's in the fourth stage. Like, after all the learning is done, that's your live market assistance. That's what we do. Okay. Would like a detailed intraday webinar. Tomorrow's is the main webinar, but it's again applicable across all trading styles. It's more like in-depth chart analysis. Intraday, like tomorrow's is more about the concepts that you learn. It will have a great, like, your understanding of demand and supply zones and everything in short will actually change. It's a much more practical in nature. Is recession about to come? Not really. Like, everyone worries about it, but Indian domestic market is too strong. What do you mean by two trade setup? Trade setup meaning trading strategies, right? There are so many different trading strategies. Take 2 or 3 of them and keep replicating those trading strategies. You can also check out, if you want, there's something called as a playbook section in our Academy app. Check out I think there's the Haven app on Play Store. Check playbook on that. I think there's something called a playbook 2.0 or 1.0. I remember it's free over there. Just check out those trading strategies over there also if you want. These are all practical trading strategies. Swing trading was positional trading for a small capital of 10,000 rupees. I would say swing trading. Positional trading is generally for your recurring investments. Every month, your SIP of 20% of your salary, that should go into positional trading. Like that, you keep adjusting more and more. Okay. Time cycle works in swing trading. Swing trading, I haven't really checked out the real times on that. It's a little difficult because each stock has its own nature. So, yeah, swing trading, there's something called as relative rotational graphs. It's a little more RRG charts. That usually helps in time cycles in swing trading. Okay. For cryptocurrency, can we invest monthly in the ones you suggested or one time? I would recommend put one time first. When the markets head out a little bit further, add more. Like, crypto is not a monthly investment platform because every 2 years it will crash, right? So before the crash, you have to pull out also. Isn't this strategy basically indicator trading? If you're talking swing highs and swing lows, these are not indicators. That's a code that was derived as an indicator. Swing highs and swing lows, you can't find it on all the indicator platforms. It's actually not possible. Like, it's not an indicator technically. It's price action. Forex best platform, you can check OctaFX or there's XNex. You can check out XNex, which is pretty good. Yep, XNex. Any way to contact with you one-on-one? Like, you can text me on WhatsApp anytime, no problem. How to live trade with you guys? Again, that's part of the membership. Anything else that I covered? Cover more on fixed. Tomorrow, it's more like intraday itself. We won't be covering deep into Forex and crypto. There are different sessions, webinars will be organizing for crypto and Forex exclusively. That'll be different. Okay. No, none of the programs are actually listed by SEBI. Do note, Forex trading is actually illegal in India. You're not allowed to trade Forex legally, right? So what we usually suggest is XNex and everything, use it for just $50 to $100. Okay. Like, any type of Forex trading is actually not legal in India because India doesn't like money going out of the country. That's the problem. So $50, just practice Forex trading on these platforms. But your objective is to be a Forex funded trader. Check out this website called fundednext.com. Okay. So here you will see on funded next, these are the start challenges section, for example, right? So all of these are legal programs. So you use fund forex market just to learn trading properly, and then you can sign up for the funding programs and everything on these, right? So you can get a $6,000 account. It's a $59 exam fee. If you pass the exam, you can get the money back as well. So that's what it is. Okay, how much should the valuation score be? Even if the valuation score on trend line is average or red in color, orange in color, you can still buy it, no problem. Because tomorrow's session contains Bank Nifty options. It's not exclusively focused on option buying, but it's more about the strategy to use option buying. Most of the strategies that is used is only on Nifty and Nifty options. I mean, Nifty 50 and Nifty Bank. Okay. Can you share all the links mentioned? I'll put up the notes on the WhatsApp group after the session so you guys can check it out. All right. All right. Cool, guys. I think we can start winding up today's session. Is bootcamp course only 2 sessions long? The main sessions are today's and tomorrow's. The rest of them will be like an add-on webinar pass that we have, like some simple sessions like 1 hour, 1.5 hours later on. Okay. Okay. Any simulator for practice? You can use TradingView itself for practice. You can see this trading panel option. You will find paper trading. To click this, you can basically replicate trades like you're taking a trade, honestly. Like just click on the buy button. Oh, okay, it's not working. The WhatsApp group is not actually meant for communications. That was an error, actually. It's not supposed to be accepted. That's the different thing. All right, cool. All right, guys. I think for membership information and everything, we'll be putting a link after the bootcamp. If you guys like the bootcamp, so you can actually sign up for the membership. All right. Cool, guys. Thank you for your time. Thanks for joining in. Hope you guys learned something new. Take care. I'll see you guys later. Yeah, sure. Anytime. Bye, guys. Take care.
Record.